Hello and welcome to ET Future of Money, where we explore the disruptive changes and innovations that are redefining the role and scope of money, as well as the economic, social, and technological impact of this transformation. I'm Maloni Bhatt, and we have lots of informative sessions around digital payments, which have been big enablers of financial inclusion and have also opened up new businesses within financial services. The size of India's digital payments market is likely to grow to $10 trillion by 2026, and this represents a huge opportunity. We have CEOs and industry experts decode this opportunity, the innovations to enable a cashless digital economy. We also have marquee names delving into transformations in banking and wealth tech. But our highlight for today is a special Innovators Launchpad where we feature startups that are attempting to widen financial access to India's most vulnerable and underserved population. We're thrilled to have Reserve Bank Innovation Hub as a knowledge partner for this segment. But first, join me for a special interview with the CEO of Reserve Bank Innovation Hub, Rajesh Bansal. He speaks to me on enabling access to frictionless financial services to billion Indians. Hello and welcome to ET Future of Money Summit. In the last few years, India, financial services and in finance, it has benefited tremendously from the opportunities brought about by the speed and scale of technological change in payments, in accessing credit, for instance, in SureTech. But all opportunities and with it choices are matched by risks. And in India's case, the opportunity and access is not equal for all. We have a big gap to fill when it comes to financial inclusion. So, how do you promote and facilitate an environment that accelerates innovation across the financial sector? How do you ensure that it serves everyone and not just one half of the population? I'm Maloni Bhatt, and I have with me someone here today who can throw light on all of these questions. Rajesh Bansal is the CEO, Reserve Bank Innovation Hub, or the RBIH, as it is also called. Mr. Bansal was a member of the founding team of Aadhaar and specifically led the design of India's direct benefits transfer system, which is benefiting millions of Indians. He also played a key role in creating India Stack, a digital ID-based infrastructure for a presence-less and cashless service delivery platform in India. He's been a member of a number of committees of the Government of India and of the RBI. Mr. Bansal, welcome to ET Future of Money Summit.
Thank you so much, Maloni. It's my pleasure to be here.
And it's our pleasure to have you, sir. So if we can begin, can you start off by telling us what's the idea behind the Reserve Bank Innovation Hub and what are the key pillars of innovation that RBIH focuses on?
Okay, so, way back in August 2020, the governor announced that we want to set up a separate entity called the Reserve Bank Innovation Hub. And obviously, last year is when we started work. I joined in May last year. So coming back to the background, in your introduction, you mentioned, my introduction also, you mentioned India Stack. You're all aware that India has the pleasure of or has the opportunity of the world's best digital public goods. It has benefited hundreds of millions of people, but we feel that there is a lot more that needs to be done. And all the things that we hear about fintech is still touching 300 million is my take. What about the remaining 650 million? So that is the mission which we have been set up. I'll tell you what our mission is as I define it, in the last 1 year as CEO, is we want to ensure that suitable, sustainable, both from an environment as from an economically affordable point of view. Financial services are available to 1 billion people in a secure, frictionless manner. I know it's a mouthful, so I'll just repeat. Secure, sustainable, suitable products in a frictionless manner. Because even for you and me, Maloni, the financial service is not a frictionless world. I'm sure, your bank, your insurance company keeps on troubling you and me. My bank is currently troubling me for re-KYC. I tell them, can't you give me better options to do re-KYC instead of coming to the branch? But that's friction, right? So this is the issue we want to resolve as an independent company set up by RBI and which is an independent board. So the governor, when he was, here in March inaugurating the RBIH, he was very clear that, why set it up independently so that you have the freedom, so to say, to innovate with, kind of hire the kind of staff, the specialization that you guys want to, which sometimes could be a constraint for RBI. So to clarify for the audience, what are the three pillars of innovation that we are working on? The first and foremost is process innovation. Whether example of KYC, or you look at my favorite example, and you should see some things coming up soon, is that the 120 million farmers in India, forget about you and me, we are still much better off. So one of the first things we did is my team went to the field and tried to understand what is the friction for a farmer. We realized that it takes on an average 3 to 4 weeks for a farmer to get a farm loan, a 1 lakh rupee loan, period. And then we brainstormed among ourselves and said, how can we reduce friction for that farmer and make it as easy as it is for you and me to instantly take a loan? I mean, you and I get too many offers all the time, right? But apart from those offers, we evaluated what are the integrations, automations that we need. And India Stack and other land digitization in states does offer us an opportunity where we can reduce our friction. So products have largely been supply side driven, whether in India or globally. I worked in 15 markets. It's all, bank driven. I'll give you a product, whether your flow is daily, economic flow is daily, or weekly, or monthly, I don't care. This is your EMI. What we want to do is, how do we work with the ecosystem, which includes fintechs, banks, technology companies, academia, and everyone, to as good as nudge them to think about the right mix of products that should be offered. In that, my favorite example is dairy farmer. So dairy farmer pours milk daily in a dairy cooperative. Now what happens post that? How many of the dairy farmers actually get a loan to increase the number of cattle he or she has? Very few frictionless loans are offered. So we are looking at, is there a possibility to reduce or to create a right financial product where the repayment can be done daily, right? 10 years back, when there were no components of cashless, UPI, Aadhaar, it would have been a challenge. But today, the fact we have the best digital infrastructure, what is stopping us from actually developing a right product mix? I take a loan of 100,000 bucks and I can repay on a daily basis. This is the milk that I've been pouring at the society for the last few years. And lastly, and the most important is policy innovation. So process innovation, product innovation, and then policy innovation. Policy innovation as an enabler for process and product innovation, as well as something which is more proactive innovation. So we will work with regulators, government bodies, and everyone to see what do we need at the policy space to enable, access frictionless finance, as I call it in 2 words, to a billion people. I think I'll stop here. Happy to, talk more.
So, of these three things that you set out, process, product, and policy, from your vantage, what is hard? Everything is hard, but what is probably harder than the rest?
You're saying which of the three
Yes.
is the hardest?
Within the three.
That's a tricky one, Miloni. If you ask me from my vantage point, when I joined, obviously, and we thought all three are hard. If you ask me, process innovation is the hardest. When I'm working on this project on agri, it's so difficult for people, financial institutions, to change their processes. I'll give you an example. We have, a lot of banks are now getting excited about the work we are doing. But a very simple example, there is something called e-sign, which allows you and me to digitally sign any document. Using Aadhaar OTP, it is valid under IT Act. Now the banks tell me and my team that, sir, but we will have to get the paper signed. Na? We can always do e-sign and get done with it. So, and there are, I don't want to go into more details, but process. But maybe I'll give you another example that when I was in Aadhaar, so we conceptualized electronic KYC, e-KYC, right? Which allows you and me to instantly open a bank account, get insurance, get a PAN card. I worked with the banking system. It took us so much of an effort to actually get the first bank to launch eKYC in its true form. And when it was launched, the public, in Madhya Pradesh, where they launched it first time, they came and told the bank, sir, you have some magic or what? Don't ask me for anything. Just ask me an Aadhaar number and instantly I can open a bank account. That's why if you ask me, because in the financial system, there is risk, compliance, audit, regulation. So get through all that to actually make any process change. It is hard, but that's the fun of it, right? In the end, we feel that RBIH has contributed or Aadhaar has contributed.
Okay. So, can you go through some of the goals and priorities that you set out for RBIH?
Okay. Goals and priorities, maybe I would prefer to give in terms of the programmatic areas that we want to work in. And then I can come to some specifics. The programmatic areas, one of the big ones which I haven't spoken about other than AgriFin program is DEI, diversity, equity, and inclusion. We did realize that, again, back to the best digital infrastructure and hundreds of millions of people, cohorts being left behind. And so we want to, I'm borrowing a term I think is used largely in the US, I'm not sure, nobody left behind. And you did allude to it in the beginning. Nobody left behind, whether irrespective of your income levels, literacy levels, region, whatever other social parameter, physically challenged, right? Senior citizens. Why should you be left behind in the financial service or even the youth? Just because, we have not developed enough, products, so to say, to be able to build that. So DEI platform will look at how do we bring everybody within the ambit of financial. I wouldn't want to define as financial inclusion, but seamless, frictionless finance available to everyone. We have launched the first major focus has been 365 low and middle income women in India, because the financial sector has largely not been able to deliver the appropriate financial solutions for women in India. So we recently did a Sonari tech sprint. Sonari, as you all understand, means self-reliant lady, where there were dual purposes. We wanted women to build for women, because our hypothesis is, my experience of about 3 decades and worked in this sector, is that nobody better than a woman to understand the financial needs of a woman. And it's largely fintechs are men driven, right? I think less than 10% fintechs are started by women. So dual objectives: to set a virtuous cycle of women willing for women. And secondly, bring a more focused approach to building solutions for women. So we identified a few startups, they are getting incubated at IIM Ahmedabad, CIACO. So that's the DI work. Then as I said, there is AgriFin work. It's a work related to emerging technologies. And on that, we're again trying to do what I call as a UPI moment in blockchain, that there's nobody at scale, no country at scale who has actually done implementation of blockchain at scale. So we decided that we want to enable building of an open interoperable blockchain platform in the country, which allows any bank to choose any technology or any fabric provider they want, instead of getting locked into one provider. I know I'm getting into a bit of technology. I will try and desist, but give a high-level overview of that project. So we have run a POC right now with 11 banks, where with three fabric providers, the TLT fabric providers, and developed interoperability layer. And the POC results will be going out soon to the participant. And we are already talking to the banking system to see how do we then take the learnings of this POC, the proof of concept, and actually enable building of a blockchain solution at scale with various use cases. So that's a third important thing that we are doing. I would say I will limit this discussion to these three big areas. There's a lot to chew with a small team, but that's where we are focusing right now.
All right. And, I'm curious to know a little bit more about the blockchain, system, which is going to be interoperable, you say, by banks, because interoperability has been a big problem with blockchains. And what are the kind of services what's the problem statement that you will solve over there with the, DLT network?
Yeah, that's a very good point because a lot of people have, I know there is a joke around in the industry that blockchain is a solution looking for a problem. So some very senior person asked me this thing 3 months back. I said, I don't know the answer. We'll get back to you after 3 months. It's actually a solution looking for a problem. That's what innovation is about, right? To try new things, it doesn't work, it doesn't work. But so what we plan to do is, maybe I'll give you more clarity, that the banking system has already come together to set up a company. So this proof of concept actually did show and tell to the banking system. With their own hand, they could see how do you create a letter of credit. That is a use case we took. And about 70 participants were trained with three fabric providers. And they know, oh, so this is what a blockchain world would look like. This is the effort that I put in. You're also doing scalability testing because India, the volumes are high. You can't look at volumes of Estonia and say, I will go ahead because Estonia, it works in Estonia. So we have looked at some of these, and the banks, especially the IBBIC banks, are very keen, and we are talking to them. How do we actually implement use cases? First one, we are mutually looking at inland LC. We are potentially looking at, not sure as of now, we are discussing with banks whether we should do bank guarantee, syndicated loans, and various other use cases. So the banking system is evaluating with our help on what is the potential use case. But if I'll add, like when UPI was introduced, what did you and I think? It will only be used for payment to you and me. Look at how the industry has innovated. So my take is once the platform infrastructure is set up, there'll be too much with the financial sector can use it. Yeah, sorry, go ahead.
I was just wondering, you mentioned that, the processes for you in this entire, the pillars, the idea behind the innovation hub and through the key pillars, the process has been the highest, has been perhaps the most challenging. But what I wanted to understand is, when you speak of blockchain, when you speak of distributed ledger technology, you're talking about banks coming together, and operating together. How are you building the trust, or what is the trust factor from the bank's side? And are you getting questions regarding that from the bank side?
So you're talking about mutual trust between banks?
Yeah, or trust in a completely new, system, for instance.
Yeah, so this is exactly what I alluded to. Our purpose of running a proof of concept was that without spending money, work with us. The three fabric providers were nice enough. We have not paid any money to them to actually test it out. So they now have an enormous amount of trust. We did a survey, and most of the banks are, no, I want to do it. So that's the kind of thing I would say we have helped, not just evangelize about an idea, which is an old idea, but actually been able to gain trust. That's a good point you brought in the blockchain, technology. Yeah. So their technology business, all of them are like, no, it works. So let's actually implement it.
So I wanted to talk about, the startup ecosystem. India, as we know, has the third largest startup ecosystem, just behind the US and China. We have some of 50,000 odd startups, and I think 14 unicorns so far in the first half of 2022. Fintech is also, one of the fastest growing sectors. From your vantage, what are the challenges you see fintech facing? Right now the environment is really tough because there is high inflation. There is a recessionary outlook when it comes to economies like the European economies and even the US. And of course, there are challenges to our homegrown fintechs. And how do you see RBIH to be an enabler for fintechs?
So I know it's, a lot of people call it in the last few months, especially the kind of funding drying up and various other issues, which I would say not really within our ambit, but how do we enable and ensure that startups succeed? First, we bring new ideas to the table. So I would say we enable thinking of solutions which startups have not even thought of. And we don't do it just on our own. I met maybe 100, 200, maybe startup founders. And when we talk about things and the fact that we are able to connect the dots, and then we tell them that, look, why have you thought of this? Have you thought of doing it this way? And they're like, oh no, why did I not think of it that way? So that's one. Secondly, we also unlock a lot of data in the ecosystem. For example, the state government, the central government have a lot of data which is there, out there. They are happy to use it for benefit of their citizens, but we have to develop the right frameworks to be able to use it while ensuring privacy protection. So I'm already talking to 3 state governments. How do we develop a framework? And talking to fintechs, how can you potentially use data for maybe a better insurance product, a better credit product, or even a better savings product? The state governments have a lot of data about citizens, including the DBT data. So how can we potentially use all of that? So unlock huge amounts of data to create new opportunities for fintechs. And maybe lastly, I would say also act as an interlocutor, sounding board for them when they are kind of at a dead end, not in funding again. We are not the guys who fund them, but in terms of where do we go from here? So me and my team actually sit with them, brainstorm with them, and then potentially look at this is the potential way forward. But lastly, I would do mention that I also work with the VC community. So I did give disclaimers about no funding. So what if we don't plan to fund as of now? I was on a call with the IVCA, the venture capital PE equity guys last week, and just 2 weeks prior to that, where we keep them updated on the key areas we are enabling. So because eventually, if your friend has an idea, after talking to us, that he or she will need some funding, right? So the IVCA is our other engagement, which helps, the industry keeping is updated on what are the frontier areas in which RBIH is willing to provide support.
So can you, lastly give us some of your thoughts on how do we accelerate India into a digital and a cashless economy? You've already worked on it, and just would like to know, what are your thoughts on how do we push this momentum that we already have?
So one of the first things we have to do, and the governments are realizing right now, that there is something called digitization and, or rather something called computerization and something called digitization, which will enable data to be used, read through APIs, exchange, instant things are happening. So that, is happening. The central government and some states are already thinking about it. And as I told you, I'm talking to a few states that to make India digital India and frictionless, not just finance, any service to a billion people, we will have to use technology at a very different scale. Again, it will not help if the data or the citizen interface sits in a computer. So we will have to develop the right citizen interfaces to enable a truly digital India. Some steps have already been taken in that. In the case of finance, digital infrastructure that has been built is enabling that. Specifically in the cashless, I would say you might have seen the latest RBI vision document on payment systems, which has set targets on what are the key things that they will work on. And I would just like to add that obviously there are issues of access, including no device. So eventually, even if we have 600 million devices, for us to expect 950 million to go digital, it'll take a few years. And I work extensively in Kenya, where 80% people use digital payments using M-Pesa. So there is a long way to go because they could do USSD and a feature phone based. In India, smartphones are there, 600 million smartphones, but about 200 million people use UPI. The trust, so coming to the last thing, trust is what we need to work on. How do we build trust in digital interfaces? And specifically in our work, what I call as trust tech. How do we ensure we build trust in financial services so that it becomes seamless? And if there is a problem, like the Gen Z millennials are used to instant resolution at Amazon, Zomato, whatever, we in the financial services space will have to do that to ensure that the young generation, who is born digital, is native digital, will actually adopt all of this.
So hard work all around. It's been a very interesting conversation, Mr. Rajesh Bansal, CEO, Reserve Bank Innovation Hub. And it's the story of this bold new innovation strategy, the Innovation Hub. We wish you the very best, empowering, the objective of the Innovation Hub, which is to devise customer-centric, secure solutions for the ecosystem, innovations which are adaptable, and most importantly, as you point out, that benefit all. Thank you so very much for your time and for your thoughts today.
Thank you so much, Miloni, for having me over. Thank you. Bye-bye.
With none other than Mr. Nilesh Shah, who is the Managing Director of Kotak Mahindra AMC. A gold medalist chartered accountant, he has over 3 decades of experience in the capital market. Welcome to the show, Mr. Shah, and thanks for being a part of the discussion.
Thank you for inviting me over here.
So the wealth management industry in India is still in its nascent stage. So for people who aren't familiar with the concept, what is wealth management and how is it different from asset management?
In asset management, we manage money on behalf of people as per the mandate given. So for example, if Nikhil wants to invest, let's say, in large cap equity, he will give money into a mutual fund scheme, which is dedicated towards large cap equity. But the wealth management is taking care of Nikhil's objective. Now, maybe this is the market where you should only be equal weight to equity. And part of that can be in mutual fund, part of that can be in direct stocks, part of that can be in offshore assets. So wealth management is all about taking care of an individual's wealth. Asset management is all about managing assets as per the mandate given by the individual.
So what is that extra part which would, which is not there in asset management, which is there in like maybe taxes or real estate?
Asset management is, as I mentioned, as per the mandate given by an investor. It is a collective investment pool where lots of investors come together. Wealth management is all about individual attention. It's not only managing your mutual fund investment or AIF, but also variety of services like succession planning, record keeping, tax management, and so on and so forth. So I'll say that wealth management is a bigger service to the customer. Asset management is a smaller part of it.
So is wealth management meant only for our millionaires and billionaires? How can we make these services accessible to the middle and lower middle income classes, as well as young people who are just beginning their savings and investment journey?
So essentially, there is no free lunch in the world. There will be more wealth managers who will be happy to serve a billionaire than a retail investor. But look at reverse way. A billionaire has already made money. The retail investor needs the services of wealth manager to make money and become a billionaire. So there is a need at the retail investor level, and there is services at the top end level. But thanks to technology, now there is a fair amount of mixture happening. We have seen many platforms coming up which bring institutional class research to retail investors. They give you services through technology. And at the end of the day, I believe the lower end of the recipient or investors will have more technological solution, and the top end, the HNIs, will have more personalized solution.
What are some of the trends that we are seeing right now, especially in the light of the digital transformation, tech revolution, and now also we have the hype around crypto? So how are portfolios of HNIs changing now?
So traditionally, if we see, most HNIs were invested towards land and real estate, partly gold. Now, slowly and steadily, there is a shift from real assets to financial assets. Even in real estate sector, we have started seeing REIT, InvIT coming out. Against gold, we have seen sovereign gold bonds coming out. And overall allocation towards fixed income, hybrid, and equity is rapidly increasing. Earlier, wealth management and HNI portfolios were more direct. They will go and buy land, they will go and buy real estate, they will go and buy direct stocks. Now it is getting more assisted. They will invest in mutual funds, portfolio management scheme, alternative investment fund. They will take help of professional bankers and wealth managers. So clearly there is a churn happening whereby from direct to professionals, from real assets to financial assets, movement is happening.
And amid all this movement, how important is diversification in your wealth management strategy?
Well, you have been told that don't put all eggs in one basket, and that proverb applies onto the wealth management side. With the benefit of hindsight, we will know that you should be investing in this asset or that asset. But how many people can predict future? Virtually none. In an unpredictable environment, in a volatile environment, what is the best way to survive? The best way is diversification. You put some money in debt, equity, commodity, currency, offshore assets. You try to be overweight cheap markets, cheap asset classes. You try to be underweight expensive asset classes. That combination ensures that year on year, you continue to get real return better than inflation with an acceptable volatility. So clearly, wealth management means diversification.
Typically, for an HNI investor who is aggressive or fairly aggressive, would you recommend like a 60%, 70% in equities, then rest followed by bonds or fixed deposits, then gold, and maybe a bit of real estate as well?
So apart from risk profile, you also have to appreciate the investment objective and the time horizon. Now, if you are Virendra Sehwag kind of aggressive batsman, obviously whether it's test match or one day or T20, you are likely to play aggressive. Same way, an aggressive investor in a bullish market, bearish market will be seeking higher risk, higher return opportunities. But the same Virendra Sehwag, when he's playing on the 5th day of a match, in a test match, he's unlikely to play like he's playing a T20. he'll be cautious. So you make adjustments to your risk profile depending upon your investment objective and time horizon.
Affluent middle class population is growing in India, and as per the estimates of the World Economic Forum, 80% of our population is expected to be in the middle class segment by 2030, which is up from 50% a couple of years ago. So are we moving towards greater adoption of wealth management services? How do you see this market growing?
Undoubtedly, today there are roughly about 3 crore investors in mutual funds on a unique basis. Someday it's going to become 30 crore. Today's 3 crore investors are getting serviced by wealth managers. Tomorrow's 30 crore investors will require services of wealth managers. But as I mentioned earlier, the top end of the wealth or investors will be serviced in a personalized basis. The bottom end will be serviced by technology. It will be an evaluation of model where there will be UDP restaurants also and a 5-star restaurant also. You will have a Michelin rated chef also, and you will have a normal chef also.
In the current market environment, where there's high inflationary pressure and there are already fears of a global recession, has your strategy changed? Is your focus currently, how much of your focus is currently to hedge against inflation?
So undoubtedly, inflation is a cause of concern. And there are multiple factors which is driving inflation. One, obviously, is the geopolitical reasons. If there was no Russia-Ukraine situation, then certainly inflation would have been much lower than what it is today, especially in energy-related items and food-related items. The second one is also the fiscal and monetary stimulus, especially in G7 countries, which put more money in the pockets of consumers, and hence demand went up. Now, if we see commodity prices have started correcting, wheat prices have moved from about $850 to $1,200. They are now back to $850 in US. Energy prices haven't corrected as much, but as demand comes down, energy prices also will come down. The Russia-Ukraine situation is still unresolved, so it will have material impact on the future trends of inflation going forward. The fiscal and monetary stimulus are now on the withdrawal side. Fed is tightening, they are launching QT. So overall, if I see inflation undoubtedly is high, but it is reaching a peak and it will start coming down because of the drop in commodity prices and withdrawal of fiscal and monetary stimulus. The joker in the pack remains Russia-Ukraine situation. We did hear a research report which talked about oil at $380 in certain extreme scenario. Now, I don't see that's the likely to happen, but you have to keep in mind that something like that can happen with a very, very low probability, but very, very high impact. Now, in this scenario, obviously, you have to manage your portfolio with a view to generate real return. Globally, equities have come down to a level which is comparable to March 2020 pandemic valuation level. So asset classes like gold, equity looks reasonable from a risk return point of view. They will be volatile, no doubt about it, but they can deliver returns if even start supporting the global recovery.
So, Mr. Shah, when you go and meet your clients, and especially the rich investors, do you see what is your understanding of? Are they fearful? Are they greedy? What is the sense of the greed and fear index?
So, India is not a homogeneous society; it's a heterogeneous society. You get all kind of people, but majority of people are today far more confident about India growth story and future than probably ever in the past. This confidence is reflected into SIP flows and equity flows. We are having net sales of about 16,000 crore a month. Earlier, FPI sold about 50,000 crore between Jan to March 2020, and our markets corrected 38%. This time they have sold 5 times more from October 21 to June 22, and markets have corrected about 20%. So clearly, it's not only the bullishness of the investors and confidence of the investors, but also the money which is talking. And this is a fantastic thing. So overall, investor confidence, retail, HNI, India, Bharat, urban, rural, top end of the pyramid, middle end of the pyramid, all seems to be fairly confident on India. As I say in lighter vein, this time investor confidence on India growth story seems to be ahead of fund managers' confidence on India growth story.
Interesting. So in recent years, we have seen the emergence of wealth tech as well as digital models. So how has this changed your model of functioning?
Well, we have to change as per our customers' requirement. If I don't change, they will always find some other alternative. So even before the pandemic, we were moving towards digital world. Our KYC was becoming digital. Our onboarding of investor was becoming digital. Our investor education was becoming digital. Our servicing was becoming digital. Our query resolution also was becoming digital. Pandemic probably fast-tracked everything. Even our interaction started going digital. Very recently, I had a bank event in physical format. And while after delivering my lecture, I was standing out for recording some bites. Many investors came out and said that, Nilesh bhai, in COVID time, we had heard your webinar and we invested and we are making a lot of money. Thank you. Now, this was all possible because of the digital medium. If we had to wait for physical event, I think the entire COVID opportunity would have passed and not have been able to talk to our investors. So there is no doubt that right now there is fast track of digital ecosystem and environment in our industry as well as at Kotak Mutual Fund. But at the same time, it's going to remain a hybrid system. We will serve our customers in physical world. We will serve our customers in digital world. And as you correctly mentioned, the world is going to go from physical to digital to physical.
Given the way AI, artificial intelligence, and machine learning has developed in the recent years, do you think a bot is going to be our future wealth manager?
Undoubtedly. If I read a balance sheet, I'll require probably 2.5 hours to go through a balance sheet. A machine will learn that balance sheet in probably 2.5 seconds. I will miss out many things while reading the balance sheet. Machine won't forget one digit. So there will be usage of artificial intelligence, machine learning, and data analytics in the business. Whether I use data analytics to figure out what product is appropriate for a customer, whether I use data analytics to figure out when am I going to receive redemptions, or whether I use machine learning to read balance sheets and make my research better. In every aspect of our business, we are going to see AI, ML coming together. And the same will be true on wealth management side. So we are undoubtedly going to use data and machine learning and AI to create better product and better services and better performance for our customers.
what advice would you give to someone looking to obtain wealth management services? What are the signs of how do you find out whether the wealth manager is skilled and ethical enough for you?
So there's no magic wand over here. If you want to, let's say, if you go to a new place and you want to eat out, how do you figure out whether this place is good enough or not? One, you will ask local contact, so you will get reference. You will go to Zomato, Swiggy kind of thing and figure out what is the rating of this restaurant. So you will go by digital opinion. And if you don't have access to physical reference or digital communication, you will probably go looking at the brand. If brand also is not available, you will still go there and look at the architecture, look at the restaurant, how good, bad it is, whether it's crowded or not. And finally, you will go there, place your order, taste it, and get yourself confirmation whether it's good enough or not. The same thing applies in Wealth Manager. Check the brand, check the references, check the servicing and digital solution aspect of the Wealth Manager. And the most importantly, experience it. When you start with the Wealth Manager, you don't start giving 100% of your wealth. You engage with him to figure out whether he or she has understood your risk return profile, whether he or she is doing transaction or he or she is offering you solution, whether he or she is interested in commission income or actually making you rich. So experience the wealth manager to finally reach a conclusion based on brand, digital connect, servicing, solutions, and experience whether this gentleman or woman is appropriate or not.
So can I sum it up by saying that wealth management is like a one-stop solution for getting all your queries, getting all your, how do you manage your own money, your taxes, your real estate, all your investment. It's like a one-stop solution. You don't have to run around different fund managers. You don't have to look for properties. You don't have to get separate income tax consultant, etc.
So undoubtedly, a full-service wealth manager will be able to provide all these solutions packaged together. But many a times there are advisors who just give you the advice and then execution is done independently. So you choose a model which is appropriate to you. Do you need advice? You need advice plus execution. If you need advice, the costs are lower. If you need advice plus execution, costs are a little higher. So there are different models available. One can choose whatever is convenient.
So, Mr. Can you tell us how do we survive a bear market?
Well, in a bear market, what is the most exciting thing? In the bear market, most exciting thing is that you will be able to pick up stocks at much below fair value. And the money which you can make from a bear market to bull market will be the maximum. So think of this correction bear market as an opportunity to make more money. If there was no bear market, investors' return would have been far, far lower.
So if I have a watch list of stocks to buy, and put it on a watch list, and then how should I go about picking stocks in a bear market? Should I look at stocks that have proven to be more resilient or the ones that have fallen the most?
So in a bear market or a bull market or a range bond market, you have to buy that stocks which you believe are available at a discount to their fair value. Now, investment is an art, it's not a science. I may believe company X is available at 30% discount to fair value. And someone may believe that company X is actually trading at a 30% premium to fair value. If both of us will have same opinion, then how will the trade happen? Stock market is a place where seller thinks he is making money by selling and buyer thinks he is making money by buying. Then only the transactions will happen. So no matter what kind of market you are in, as long as you buy stocks which are representing good businesses, businesses where return on equity is more than cost of capital, run by good managers, managers who won't cheat you, who won't take you for a ride, and are available at good valuations where there is margin of safety involved. By and large, that becomes the good stock pick.
We have inflation, we know about inflation, we know about recession, we know about Fed rate hikes. Are all the devils known now?
See, it's like, cricket match. When you go to play cricket, you do know that a bouncer can come, a yorker can come, an off-swing can come, an in-swing can come. But at the end of the day, when you go on the pitch, who knows what will come? Same way in market, will have to be ready for whatever bowling throws at us. It is the nature of the market that it keeps on discounting various scenarios. So when there was no Russia-Ukraine situation, market didn't know where Ukraine was. The moment it became important, it started discounting it. So today, would market have taken into account higher oil prices, higher inflation, Russia-Ukraine geopolitical situation, US Fed rate movement, corporate profitability? Answer is undoubtedly yes. Market is collective wisdom of people. It invariably discounts all the known things. But there is always an unknown thing which comes and hits market, which we were not aware, which market was not aware.
Right. With Nifty below 16,000 level, do you think we are at a fair price?
So Nifty at about 16,000 level will be about 19 times forward earning post this windfall tax. So it looks like little above fair value, but still nearer to fair value compared to, let's say, in October 21. And this is the market where you will be equal weight to equity allocation based on your risk profile and time horizon and objective. And if market continues to correct, it could be time correction, because if 6 months down the line, market is at same 16,000, it has become cheaper as earnings would have gone up. So there could be time correction, or there could be price correction. If 16,000 Nifty becomes 15,000, there is a price correction, or it could be both time and price correction. So in the correction phase of time, price, or both, keep on increasing your allocation to equity.
At a time when our interest rate cycle is changing, how do you think, how's the outlook change for banks?
Banks are generally the beneficiary of higher interest rate as their net interest margin expands. Obviously, there is a cost where higher interest rate does impact mark to market on their portfolio. But at this point of time, we believe benefits of rising interest rates on your net interest margin will be far more than the mark to market losses on your portfolio. More importantly, banks are having 10-year low NPS, and most of it is provided for. And then the final part is that there is consolidation happening in banking sector in terms of growth, where 2-3 public sector banks and 4-5 private sector banks are grabbing bulk of the credit growth. You have consolidation happening, you have a NIM expanding, and you have NPS provided for. I think all this put together creates huge opportunity for banking sector to outperform the market.
One last question, Mr. Shah. Which are the sectors that you're most bullish on at this stage?
Banking is one sector which I'm sure you would have picked up. The other sector which we are bullish is manufacturing. In 2014, India had about 3 or 4 mobile handset manufacturing factories, generating about 22,000 crore in revenue. We were net importer of mobile phones to the extent of $8 to $10 billion a year. Fast forward to 2022, we are the second largest manufacturer of mobile phones in the world. We produce more mobile phones than South Korea, Vietnam, US. Today, there is mobile production value of about 220,000 crore. India is now exporter of mobile phones, including iPhone 13, which is now made in India. What happened in mobile handset manufacturing can happen in other manufacturing areas. Indian manufacturing is becoming competitive because our labor cost is lower compared to the rest of the world. From infrastructure deficit, we will become infrastructure available. The government is also supporting creation of manufacturing setup. There are challenges in terms of logistics cost and power cost, but because of the advantages of labor cost and some other infrastructure availability, we are becoming competitive. China Plus One is also forcing large multinational companies to seek diversification out of China. The whole world is available to them, but few of them are coming to India. Put all these things together, India will become part of global supply chain management. Government is encouraging manufacturing in India. There is incentive scheme under production linked incentive scheme, which will make manufacturing in India more rewarding. And despite challenges of logistics and power, we are becoming competitive. What we did in mobile handsets will get replicated in many sectors, and collectively we call them manufacturing theme, where we are bullish.
That's all we have for now. Thank you, Mr. Saab, for giving us your valuable inputs and time.
Thank you.
Web3 is a buzzword, and very often it is very hard to separate the hype from the fact. And it has many parts like blockchain, cryptocurrencies, non-fungible tokens, decentralized finance. Now, for many of us, all this could be jargon, but advocates say that all these things will come together to build a possible future of the internet. This future, they say, will be more fair and full of possibilities that could lead to new business models and opportunities, especially when it comes to finance. But how will this exactly happen? How will it impact you and me? And what are the factors that will need to be in place to create a sustainable alternative to what is mainstream? Hi, I'm Aloni Bhatt, and I have with me Sumit Gupta, co-founder and CEO of CoinDCX, one of India's largest crypto exchanges and the first crypto unicorn in India. It has recently announced its foray into the Web3 space. Sumit, welcome to ET Future of Money Summit.
Thank you so much, Melanie. Excited to be here.
And it's very good for us to have you to talk about CoinDCX journey as a wealth tech destination and how Web3 can shape the future of finance. So, let's dive right into it. You recently launched CoinDCX Ventures this year. The announcement was that it will focus on the Web3 ecosystem in India and globally, and it plans to invest about 100 crore rupees in startups over the next 12 months. Can you tell us what led to it? And, did you really feel that you needed to launch this initiative now because we are possibly in a crypto winter, but also that there is a funding winter?
Yeah, so just to tell you more about how this thought started and just to tell you a story, right? When we were launching CoinDCX, right, in 2018, there were not many investors who were investing in this space. So we had our own set of experiences when we were raising capital, and it was, I tell you, it was not very easy back then when you have RBI circular and so much volatility in terms of regulations in the market. So it was a difficult time. And so much so that we were almost like sort of deployed almost all of our savings to build the platform from scratch, because there was no external capital and access to capital was not easy, was not solved back then. But still, we continued to build, and then the company grew. 2 years back, when we started interacting with a lot of people in this space, we realized that some of the teams are doing an incredible job, Just that because of the regulatory uncertainty in India, they were not getting access to some of the top quality investors, right? And that is where we felt that, okay, this is a journey where we ourselves have gone through, right? And we know that all of this is temporary in nature, and we as a company would want to back these high quality startups so that the ecosystem as a whole grows in size. I don't think it's one company can build the ecosystem in the country. I think one of the way that we feel we can sort of contribute to the growth of crypto and Web3 ecosystem in India is by creating sort of these, companies, solving either the infrastructure or building different use cases, who are sort of, playing a key role in this. Exchanges at one place, and then you have different protocols who are coming from India, need capital, but they don't have access to capital because foreign investors either are not even aware of these companies. Second is they are not maybe sure and confident of the regulatory market. We felt that, okay, I think that is where we want to come in. We want to step in and we want to support these companies because we were in that place, 4.5 years back. So, and you never know, like these companies can become unicorns, right? Just like how Point D6 is in the coming years. So we felt, okay, this is something that we would want to sort of anyway wanted to work on, but we felt now that Point D6 is at a reasonable scale and there's capital, we have a significant user base and our ability to add value to this business is also very high, right? Because of our business. So we felt, okay, this is a good time. And that's how sort of it built up. And why now? I think I have learned that, when everyone is rushing towards something, right? And then like, you don't want to be a part of that, right? I think what we believe that this is a long-term play. This space, you'll not see like hundreds of use cases, very popular, used at millions of users every day in like next 1 year. I think this is a thing that will take its own sweet time. Most important thing is to nurture the ecosystem, to give them the resources and the capital, whatever they need. And I interacted with almost like maybe more than 300 founders in this space in India in the last maybe couple of years. It's very frequent. And whenever I go out, what I've realized is that maybe 1 year back, there was a lot of noise, right? People were like, just because there's capital available, we're just building it. But I think now, and valuations were very bloated, right? Valuation very high because capital was available. But now I think the quality of founders who are building in this environment is actually better, way better. And founders and entrepreneurs are building in this space for the right reasons, not because of, NFT or Web3. Like they understand it. They understand it. They are building the right solutions. Then they are committed to it from a long term. If someone is building in this space just for 1 year, I don't think they're going to get anything. It's like, it's a very short-term approach. But we are finding good companies who are building it for the long term. And right now, they come with the right expectations. They come in for the right reasons, right? I think that is very exciting. And we would want to back those companies. And that is the reason why we felt, okay, while everyone else is not betting and putting money in these companies from India, we would want to come forward and invest in these companies so that they can become the unicorns of the future.
All right. Sumit, you said something very interesting. You said that you yourself, being part of the ecosystem, found the valuations very bloated, a year or so back. And you also been investing in other protocols like Spheron, Taki, the router protocol, and all of that. So, what do you think of those investment decisions? Are they linked to what you're doing now, the growth of the ecosystem? And then the other part of this question is that, outside this Web3 ecosystem, is there any other space that, you're excited about?
Yeah. So for a lot of the investments that we have made, I would just like to highlight that a lot of these are high quality companies, right? As a company, we don't, independent of valuation, independent of everything, I think what we fundamentally look at, and then there's a very well-defined due diligence process and framework, where we sort of rate these companies on various parameters. And then, there's a quantifiable way where we know, okay, this is a company which is investment worthy, this is a company which is not. So that framework is properly laid out and led by our ventures team. And when we sort of look at these companies, I think there are a few things that we fundamentally look at. One, are they going to be an integral part of the overall ecosystem, right? Second, which is also important, is that when these companies go big, whatever problem they are solving, how many, what is the impact of that problem, right? For example, if someone is building let's say a distributed computing platform, right? In our understanding, how critical that will be, right, in a Web3 world, maybe 3 years down the line, 4 years down the line for companies. So we look at, okay, right now people are using AWS, this is what they are paying. With this solution, they'll pay 1/10 of it. Companies will use it because it's safer, secured, trustless, and will companies around. So we do entire due diligence. We talk to people, and we feel, okay, these are very interesting things that has to be there, right? And these are the infrastructure layer. What we feel is that any country, any industry cannot just be created out of like use cases, banana use cases. Like it cannot happen on day one. What is important is you have a core infrastructure layer. Once that infrastructure is built, then you will have different companies built on top of that infrastructure, and then you will have companies who are built on top of that solutions, right? So right now, a lot of companies are building phenomenal, amazing projects on the infrastructure side. That's an area we are excited about, because that infrastructure foundation has to be strong. If we did not have internet, if we did not have a TCP/IP protocol, we would not be using interacting like that, right? That's a communication protocol, right? So those, even though we don't interact it with all of those things in real time, that's more technical, but for any industry to grow, that infrastructure is very important, right? Second thing we are excited about is overall use cases of blockchain in the financial world. Why? Because I think financial world fundamentally has been, it touches all of our lives, and there are a lot of legacy systems that are built like 20 years back, and the rate of innovation is not as fast as it should be. And also the financial world is right now not open fundamentally. Means one financial service or product cannot talk to other financial service or product. The reason, like for example, UPI is so successful because I have a bank account, I can use any app and I can do UPI, right? When systems will start talking to each other, I think that just opens up a lot of possibilities. Why I'm very excited about DeFi in particular is because DeFi is an open system by default. Means it's like a money Lego, right? You build one, let's say you built a startup and you built a protocol, DeFi protocol. I am building something else. Actually, these two can talk to each other because that's on blockchain public. So that just opens up a lot of possibilities. And obviously when the system is open, the rate of innovation in that is way higher than a private system, right? If 10 people are developing on it, versus millions of people are developing on something, the rate at which innovation will happen in the second part is going to be way faster. I think that's the trend we are seeing in DeFi. And I fundamentally believe in the next 5 years, we'll see, millions of users, or even like close to billion users interacting with DeFi directly or indirectly. So that's an area we're excited about. We are also seeing a lot of Web2 companies thinking of Web3 angle to their business. I think we have seen Flipkart launching, I think, what was the name? Some drops, right? And a lot of, gaming companies, I think, will move to GameFi. Artists have sort of started recognizing NFTs. So a lot of these changes are happening at the fundamental level because they believe that the values that were going to brokers or intermediaries in between, with blockchain we don't need that. So a lot of these Web2 companies will also sort of migrate and build on Web3 using blockchain as the infrastructure, right?
Yeah.
So a lot of these trends we are seeing, right? And we would want to be early backer of all of these trends. These are just like some of the examples, but any company that we believe is going to serve ecosystem, even if it's let's say if it's strategic, if it's of a strategic importance, or if it's a company which we believe can become $1 billion company in future, I think if it aligns with our thesis, we invest in them.
But Sumit, many are saying that you may have blockchain-based tokenized services on the web, okay, but you may not be able to entirely replace the existing infrastructure. For instance, the existing technologies or underlying technologies will exist without the web evolving into Web3. What do you think about it?
See, Web3 essentially is a sort of internet. Like right now, we can do anything on the internet, right? The difference in Web3, right, is basically users will be able to own a piece of pie, right? Second thing is you will have full control of what you are doing right now. All of these companies, like, right now, whatever we do on the internet is monopolized by few technology giants, as we call it, right? Who sort of control what we are allowed to do, what we are not allowed to do, right? I think it's more philosophical. It's more like sort of value driven. Like there are people who feel that this is a kind of internet that we want to see, right? We want to see a future. We want to see an internet where we have more control over what we do, and companies are not playing around with our mindset or showing information. If I'm browsing on Instagram Reels, like, I am not getting influenced by a lot of these things, and this has a massive impact, right? Right now, even there are elections that can be won with just like showing data and, so I think there are a lot of things that can happen. I think I would be very excited to see internet where, we have control of what we are doing, and what we are doing on the internet is not leveraged or used to manipulate us, right? Now, second thing is, of course, I agree that it is not going to be like whatever we are using, right? Everything is going to shift. It doesn't work like that, right? What happens generally is, for example, we are using let's say a website where we are writing blogs, right? Let's say that can be built on, blockchain. Or if we are using an app, if it's a banking app or a finance, fintech app, that can have, we might not even realize what's happening in the background, but it would be using blockchain at the very core of it, right? And for us as a users, we might not even see the difference, but that's how I think it will transition. And then at one point we will see, okay, this is, we will experience a world where whatever I was mentioning will become a reality without common people noticing a big difference, right? We will, yeah, right now we use internet, but we don't know how internet works. We just go to a website, we type the domain name, and then it just loads up the page. But when we type a domain name, that's actually a DNS, which is linked to an IP address, and that IP address is posted on a, people don't, all of that is extracted out. I think that is what will happen in this space as well.
Yeah, so you're saying that it's a journey, it's not exactly a destination. Yeah, all right. But, you spoke about Web2 companies folding into Web3, and we're already seeing, right, like Facebook repositioned itself to Meta, Ubisoft, which was a game developer launching in-game NFTs, Twitter also built something, right? So regardless of how all of this actually works out, suppose, these legacy firms were somehow successfully disintermediated, what would stop other companies from filling this power vacuum themselves, right? And how do you safeguard against that?
See, I think just one example I can cite here is that 20 years back, there were a lot of, there are a lot of companies which did not even have any presence on the internet, right? Just 20 years back. And, around that time, if a company did not have an internet strategy, they knew that they will not be relevant 10 years down the line. Like, they have to have an internet strategy and they have to come online. If they were not coming online, they would have been disrupted already, maybe by, companies like Myntra or Jabong or Swiggy, because these are technology, and technology moves really fast, right? You will not even know how it has changed like 2-3 years, but we have seen that change in our lives, right? So I think just like how companies had to adopt to an internet strategy, 10-20 years back to stay relevant, I think companies will adopt eventually, right, sooner or later. And that is what we are seeing, where big companies like PayPal, Stripe coming onto that side. Of course, they will not go 100% all in one go, but it's a journey, right? We have seen, Facebook even rebranding, repositioning it to Meta, because they believe that's the next evolution of social interaction, which is going to be more immersive in nature, right? And yeah, I mean, like, to me, it looks like, okay, that's the next possible step, where the interactions that we are doing, it's a better thing where we can have it, with deeper experiences, right? And more sort of immersive, right? So that makes sense to me. And, Facebook, believes in that. And it might pan out in 5 years, 10 years. I don't know, right? But at least that is the shift that we are seeing. And I think more and more companies, right, will shift into this, or will start adopting one, small parts, and then, evolve their strategy also over time. But I think one of the thing that impacts this decision, or the rate at which this migration is happening, would be the regulation. So I think that once that clarity is there, because these are businesses, no business would take the risk, just do all of that. I think Facebook is at a different level, but the rate at which this migration is happening and companies adopting to Web3 use cases and having a Web3 strategy will happen a lot faster when there is sort of positive regulatory framework. But the moment it is there, I am very certain the rate at which companies will come into this is going to be even faster than what happened during the internet time, because the world is moving faster than it was 10 years back. So I think that's I fundamentally feel that's an eventual step. It will happen. Of course, there are some roadblocks and there are some challenges that we will need to sort of cross, which will take its time. But I fundamentally think that will happen. Companies will have a blockchain-based strategy. some companies who don't adopt to it might become irrelevant, and it's a like little different way of thinking, right? So I think there is enough time, and we will see that transition in the coming years.
Sumit, you spoke about how positive regulatory changes need to happen. So can you tell us about some of the regulatory changes that you think need to be addressed so that Web3 will be able to shape this future of financial services?
Some of the regulatory challenges that needs to be addressed, I think one, I've learned that technology always moves faster than the law. So I understand it's not always possible that you have a clear set of guidelines, which can, keep catching up with what's happening, because, we 2 years back, we did not have NFT, and now NFT is there, right? And last year, I mean, so much happened in this space. So I think what is important, right, is to understand, like, I think when there is a new industry making, right, and when there's a policy or a law which is not sort of aligned with each other, I think the first step that needs to be done is to have a very strong sort of communication between the industry and the government or the policymakers. If that communication is not there, then both the parties are thinking from different lens, different perspective. I think that is one fundamental thing that should happen. I strongly believe that this is a space or an industry which can take India to a different level altogether. Why? Because it's a purely technological driven space, and India, in my opinion, if you look at all the data points, India is a clear powerhouse of technology, right? I don't think of, and because the regulator is the space is going, if India actually leverages it strategically and geopolitically, we will be at a different level in next 3 to 5 years, right? Because we have all the raw material or the ingredients to actually be the winner in this space globally at a global center stage. So we have all of that. I think one is strengthening this bridge. Second is, if there is any apprehension, discussing and resolving it out. Blocking it is not the solution, because then things will figure out a different way, right? And the objective will not be achieved, right? I think one is identification of problem, right? There might be some challenges, of course. Everything has challenges, but how do you sort of solve that? I think is important, where industry can add a lot of value. I've also sort of mentioned in some of the tweets that, industry is actually from last several years more than happy to come and, do whatever is needed, to make and to resolve all the concerns. I think that has to be sort of solved, where, it's like a public-private partnership, right? I think that sort of model, if exchanges or the players in the country can work in solving those challenges, so that India gets all the benefit, and whatever wrong, if apprehensions are, just cut it off completely. And in fact, companies will ensure, right? And that is what you can put in the framework or guidelines. I understand building that takes time, but I think that is a evolving process. And as long as the bridge is strong, I think that can be done seamlessly and easily without much risk.
So given this background, so first of all, given the current overall market conditions, especially around crypto right now, because there's a lot of fear all across the world. That's number one. Second, the current, market conditions overall, not just crypto. All right, we're in depressed markets. There's inflation. There's all this fear of a recession in multiple economies. On top of it, when you have regulatory challenges, which absolutely is against a certain kind of technology and has been very vocal about its resistance to that kind of technology, how do you then kind of move forward? Yes, I understand that, US players want to move forward, and you say, yes, it will really propel India into the future. These are good technologies. We should talk this, that, and the other. But do you feel at some point that this is just one-sided, which is coming in from the entrepreneurial level, but it is stuck and it is not allowing movement, when it comes at the regulatory level? And is that then leading to fear within the Web3 space?
Yeah, I mean, I think it makes a difference if government or if the media is talking positively or negatively about the industry, right? I think it makes a difference in the common entrepreneur's eyes, because they are at the surface level. They are not like as deep as we are, and they might not have access to all the information that we are, because that's our job day in, day out, right? But maybe entrepreneurs who are thinking of building solutions, of course, it matters to them, right? Because that's how they will decide. So I think that is where a lot of, I would say like confusion is there, right? Which is not good for any industry to prosper. If government wants that India should, win this space, India, blockchain is good, then a lot of companies are building blockchain-based solutions, but it's them as well. And I have seen on the ground, like really people just leaving the country and setting up base in Dubai, Singapore, just because that confusion is there. So I think this is actually a problem, right? Where, how, because every line that government says, whether it is possible, it's going to have a tremendous impact. It will come in news, it will have a tremendous impact on the entrepreneurs and even like affect the sentiments from a VC side, whether VCs will invest or not. So I think one is, what is the reality and what comes out, how do we sort of align that? It's also an important part. And I agree, I think that, what policy level, things come, I think that has a big impact on how fast or how slow the industry will prosper in any country. That is why I feel that India has, very strong potential to lead this, right? And I think from a regulatory perspective, I can see sort of things moving in a positive direction. If you zoom out and plot last 4 years journey, you will see things going in positive. Of course, there are volatilities from a regulatory perspective. I think the technology is new, and I think it takes time. It's not very easy, right? I mean, I am still learning, like, every day. There's so much innovation that happens, right? And I think it can be better solved by sort of not having a bias and by being open to new technologies. Because I think all of this disruptions has happened with new technologies, right? And we have seen that in the past, right? And it's not possible that you sort of ban it and it will get banned. Like yesterday only there was a statement, right? It doesn't work that way, right? What works is like you're figuring out solutions and then ring fencing it so that we get the goodness, but we don't take any risks. I think that is possible even in this space. So I think there's work to be done. We are constantly sort of when this 1% TDS was introduced, I've been very vocal about this is going to hurt the industry, right? Not in terms of trading volumes, that's a byproduct, but overall, the rate at which entrepreneurs will build blockchain-based solutions, that's going to affect that as well, right? People will move out of the country, so it has various ramifications. So I think those small things also, combined together makes a difference.
Sumit, I know you have to go, but I have quick 2 questions for you. What's your outlook for crypto over the next 1 or 2 years? Seeing what we are seeing right now in terms of volatility and the fear that exists.
Yeah, I think, again, this is my personal thought, and I'll tell you what I have been seeing. I think the markets might remain volatile because of the global macros, right? There is talk about Fed increasing rates by another 100 basis points end of this month. And when that happens, we have seen that generally whenever there are certain uncertainties, the capital moves from riskier assets to safe assets, right? So if that happens more and more, of course, maybe, there would be redistribution of investment, and then people might move in either, safe assets or stables or gold or some other instruments. And it might make crypto less interesting for institutions, right? Retail, I'm still seeing high enthusiasm, high excitement, but maybe for institutions because they are already maybe in losses or their public market portfolio is not performing as well. So overall, I think next 1 or 2 years, I expect a lot of high quality companies getting built up. In fact, when Coinbase was building, we were born in the same market that we are seeing right now. So this is a journey that we have played before already, and I am seeing a lot of new companies also building with the right intent. And I'm sure when this period gets over, I think we will see very high quality companies who have spent years, or 1 or 2 years building the right thing. And then whenever the market opens up, maybe 2023, 2024, we will see all of those companies rising, right? And growing at a fast level. So I think this is a period to build, right? And I'm not as excited about the price movement because that has multiple factors, but keeping the price aside, but in terms of the activity, developer activity, and all of that is available in public domain, you can see. And all the data points signifies that the activity, right, the infrastructure level or people building is actually rising, which gives me a lot of confidence that we will see a lot more exciting companies in the years to come.
All right. And, very quickly, what's your advice for emerging startups in the blockchain space? What can they learn from you?
Yeah, I think thing is important. This is challenging space, volatile space, but highly disruptive, right? This is the future, and if you are building, if you're solving for it, it's very important, and something that we always follow in the company, that do not have a short-term view, have a long-term view and build it for the long term, and not build it for 1 year, 2 years. Do not build it for the hype. Do not get into it for the hype. Build it if you see a fundamental value. Invest if you see a fundamental value in that, and not just because of price appreciation. If you're doing a business, don't build it because there's capital. Build it for the long term. I think that is one way where your probability of success is going to increase exponentially if you just have this rule in mind.
All right. Sumit Gupta, CEO and co-founder of CoinDCX, thank you so very much for your thoughts today. I think my big takeaway is, of course, build, if you believe in it, build to last and build for everyone, I would say.
Yes, thank you so much, Miloni. It was great talking to you today.
Hello and welcome to ET Future of Money Summit. For many of us, more so in urban settings, technology has dramatically changed the way we live, work, and play. What that has also done is transformed the way we bank. And that's changed our banks too. They've had to push beyond the brick and mortar, go digital, ally with fintechs, all in an attempt to scale, but also be sustainable. I'm Miloni Bhatt, and I have with me today someone who's actually led the journey for some of the big banking institutions. Natasha Patel is the former head of global payments and cash management at HSBC. She's currently the CEO of India Sanitation Coalition at FICCI. And I'm really pleased to have her with me here to talk on how today banking is being transformed and what can the traditional players do to thrive in the digital era. Natasha Patel, thank you so very much for your time today.
Thank you.
You were a banker for 30 odd years and, really at the forefront in the banking industry. Now, you moved gears to be part of the development sector and you have a really unique perspective, so from your vantage, when you see the way fintech and within it, wealth tech, lending, payments are challenging or changing traditional banking, how do these traditional financial institutions respond and then evolve, especially when it comes to banking, say the underbanked and maybe, the point of wider financial inclusivity?
Okay, that's a very interesting question and something that I'm very passionate about. So very happy to talk about it here today. Fintech, which is a combination of finance and technology, is the banking system's answer to overcoming the limitations of geographic reach, speed of delivery, and the type of products that it gives to its clients. Its main aim is to reach as many clients as possible, offering them products and services that in a traditional setup, they may be challenged to offer, specifically due to the costs involved. And most importantly, it has given society a new way to consider risk, which is integral to all banking products and services. As I mentioned earlier, geographic reach is one of the main limitations of traditional banking. At the turn of the century, I don't know whether you will remember this, but Citibank introduced a service called Suvidha, which basically encouraged its clients not to visit premises of banks for any of their services, which would then get delivered to them digitally. And I remember it was something which was so revolutionary. Every other bank was like, wow, we're kind of going into the space age, The aim that Citi had at that time was to, of course, lower their cost and the footprint at their branches. And I remember pretty much at the same time at HSBC, we did an exercise to understand the cost of how much a client presenting a check for clearing to the bank would be. And that was approximately 16 rupees. Now, everybody knows clients don't pay for checks. So you can imagine the millions of checks that got cleared by banks, day in and day out. And effectively, that cost was entirely borne by the bank. So clearly, something had to be done, from that perspective. In India specifically, the cost of providing banking services, accompanied with the growth of the technology sector, were both the major catalysts to the introduction of digital solutions. And this saw the rise of fintechs as a natural corollary. One can say that the rise of fintechs was pushed by the need for digitization in the banking sector. highlighted by the need for financial inclusion. The creation, and you will remember this was around 2002, the creation of the RTGS system for high value clearing, as well as the NEFT for checks, the low value checks. This helped banks to give value to their clients quicker and in a timely manner. But it was also the same solution that provided fintechs the system that they required to create digital pathways to push forward last mile connectivity, accompanied by products such as instant credit for their clients. So this was clearly something that, kind of went hand in hand. The banks also got the benefit of it, but definitely the fintechs were going to take advantage of it. Now, however, there was one thing that the digital banks could not replace completely, at least in today's context, and that is brick and mortar branches, which is a direct result of the inability to use digital tools by a large section of our population. And this is something that India has to always keep in mind, at least for the immediate future, I would say the medium-term future, and if we don't do anything about it, even for our long-term future. This is clearly something we need to work upon. Countries like India still have a large part of their population that are yet to get familiar with digital banking. Until it becomes more widespread, traditional brick and mortar branches are here to stay, at least in the medium term. India has over 560 million internet users and is the second largest online market in the world. It is estimated that by 2023, there would be 650 million internet users. This is primarily urban India, okay? The story is very different when we come to rural India. While this number is impressive, it is important to note that the internet penetration across the country is only 50% as of 2020. Okay, so that is again something that we need to keep in mind. The big challenge today is advancing the digital footprint across rural India. As per the National Digital Literacy Mission program, rural India, which covers around 6.5 lakh villages and approximately 506 million inhabitants, has approximately 336 million internet users only. And this is mainly on account of challenges faced due to last mile connectivity, something which the government is consistently striving to solve for. Another interesting statistic we need to consider is that 60% of women today across 12 states and union territories have never used the internet. This is one of the primary areas of focus for the government, mainly on account of them being the growing workforce, especially in rural India. So under the National Digital Literacy Program, there is a plan to educate one member of each household as digitally literate. And all this is to say that while India is a bit away from total disintermediation of traditional banking services, the country is rapidly recognizing the potential of digitization to meet the challenges of geographic reach, speed of delivery, and the type of products its citizens require. The way forward then is to marry the benefits of RegTech, InsurTech, wealthtech, payments, all the new techs that are coming up to traditional forms of banking, keeping what is relevant to sustainable growth from each and creating a new form of banking which would use the best of both systems in the future. So that is really the way I see this going forward, hand in hand.
Right. So it's a handshake between, the new tech that's coming in and the traditional, brick and mortar banking. And of course,
Absolutely.
Where banking continues to provide that last mile connectivity, especially if we have to reach those people who are underbanked. All right.
Absolutely.
But banks and other financial institutions have been highly regulated, right, in India now, all to ensure that, the Aam Janta does not lose money. Fintechs are required to work with the traditional banks, and that's the way, just so that they've been put on a straight and narrow path. Now, fintech was a $50 billion market in 2021. It's set to be something about, according to PwC, a $1.3 trillion market opportunity in 2025. Yeah. The growth was fueled by, say, innovation and then light touch regulations. From your vantage, how do you see these regulations changing, if at all? And do you think that banks per se are ready for it? And how do you see that then all impacting the overall system?
So clearly, this is something that everybody in the financial services industry is worried about. right? I wouldn't even say worried, but I think trying to look at what could be the best solution. And there's no one best solution. There are several best solutions which will either be viable in the short term, the medium term, the long term. So no one has a clear line of sight of what's going to happen in the next 20, 30 years. Just to give you a little anecdote, something as simple as transaction banking is cash management and trade put together. That kind of originated in the US in 1973. And, it was a very funny system. I won't go into it. It's very detailed, but suffice to say that by 1999, that had entirely got, it had become electronic.
Right.
And so the manual part of it had gone away and it had completely become electronic. But the US still continued to clear 60% of their checks, manually. And that was an insane, statistic, but effectively it actually existed. Things have changed since then, but as you can see, different countries, different systems, expense cost is one of the biggest things. So just to answer your question around regulations, among the principal regulatory challenges facing the banking industry at present are those posed by the use of financial technology, including compliance, which, as you know, since 2008 has become so important, and incorporating fintech into the systems and structures and ensuring cybersecurity. So this is clearly the single most important agenda for most banks, right? The subsequent increase in regulation as a result of these challenges may threaten Indian fintech companies in the short term by limiting innovation and raising operational costs. However, regulatory transparency will bolster the sector in the future by enabling it to earn customer confidence and bring more capital. It's just a question of time, right? So regulators will likely pay greater attention to fintech firms as they grow exponentially. They have to, because that's where the mass will be going. Few platforms have already been introduced, such as Bharat Bill Pay System, payment bank licenses, unified payment interfaces, and so on and so forth, right? The central regulatory body has also introduced regulations for new sectors, such as P2P and aggregators based on a consensus-driven strategy. So a lot is being done by the regulator in terms of wanting to marry the two together and trying to find the right solution for the populace.
No, so you're just saying that it's a matter of time, and that there has to be consensus within the system. But do you feel that the regulations are too much, and when it comes to sort of being able to regulate and then allowing innovation, there is a very fine line that they have to tread?
So I would say it's important to look at this problem also from the point of view of the regulator, right? Why did we put the regulator in place in the first place? The world has seen many, many financial collapses. 2008 was just one. There were many, many others before that. Banks have been known to actually, be the centers of fraud in so many different ways, right? So the role of a regulator is not something that I would ever want to do, frankly. It's just such an intense and an extremely complex role. So if you consider the issue from their point of view, then there are some very valid challenges that they need to address. Let's look at those challenges first, okay? So across the globe, fintech has democratized the financial services landscape. That is something that everybody accepts. But the rapid pace of digitization, coupled with the decentralized nature of fintech, has posed unique challenges to the regulators, who have been used to supervising central hubs of activity and well-defined entities. And this is clearly their big issue. Regulators today are striving to strike a delicate balance between ensuring data security and privacy on the one hand, and facilitating the free flow of data on the other. The way I see it is that in the future, policymakers would need to swiftly respond to the emerging technologies and the fintech models by fully understanding their implications on the financial system and reining in its potential risks. This is a big ask, as it presumes that regulators will always be up to date with all the latest changes in technology. They will be able to understand the potential risks that could pose could be posed to the existing financial systems, and they would be able to swiftly create sufficient regulatory measures to control these risks. It is, asking the impossible, really, because not only do they have to be so, like a Superman, having different arms to be able to take care of everything, but most importantly, they have to deal with the archaic and legacy systems that already exist within traditional banking. How do you make those, relevant to the future world? So these are, again, huge issues that regulators have to grapple with. I just want to take a minute to talk about risk. I mentioned understanding risk right at the beginning. And I also said that it was one of the major differentiators between traditional banking and fintechs, right? This is the most critical challenge facing the regulators. While fintechs could help forge a more diverse and resilient financial services ecosystem, the increased interconnectedness and entry of disruptive operating models could engender new systemic risks, such as concentration and single point of failure risks. Now, these are huge issues. And, this is, again, something that needs to be thought through.
Okay. Yeah. I want to talk about banking as a service. Open banking, changed the game, but banking as a service has taken the game to just another level, right? Yeah. So banking as a service allows non-bank to offer core financial services to customers by integrating with the bank's APIs. Now, what, according to you, is the potential for banks? Is it sustainable, scalable? But more importantly, from where you are now, do you see a driving inclusion?
So BaaS, or banking as a service, this is more of an end-to-end model that allows third parties to connect with bank systems directly via API, right? So they can build bank offerings on top of the provider's regulated infrastructure. Now, adapting BaaS can open up a new revenue stream for incumbent banks and increase their customer reach, just as we talked about earlier, okay? And with COVID having thrown traditional banking operations into disarray, it has also established that new fintechs in the financial services business are very much the, popular, and are very much the, I would say flavor of the month, if you could call it, or flavor of the year, because they are effectively the ones that are, allowing people to actually move their money from place to place. Now, with the RBI's push towards digitization, we can safely assume that this trend will inevitably make fintechs proliferate deeper into the incumbent banks market. So this is clearly an area that traditional banking has to be aware of, and I'm sure they're aware of it, but they also have to make space for it in their future plans. Fintechs like Open, Bajaj Finance, Razorpay, Paytm, Cashfree, these have all created new benchmarks for customer experience and transparency. And again, something that traditional banks may not be able to do given their limitations. While traditional banks are losing their market share, some of them, however, the visionary ones at least, have acquired technology platforms that are open up to infrastructure to facilitate third-party payments. Now, I'll give you some examples which are quite interesting. Like, for example, State Bank of India partnered with Uber to provide vehicle finance to drivers, or RBL collaborated with Razorpay for digital merchant onboarding. Then you had Open that used ICICI Bank's APIs to manage payments, billing, and accounting for startups. Today, I think pretty much the bulk of India uses that. Again, RBL collaborating with Bajaj Finance to give vehicle loans. So there are lots and lots of these examples. And this is where banks are becoming nimble. And for that to happen, they have to first look at their own core infrastructure. That is their backbone, as they call it. It is a firm belief in the market, of course, that the open banking API ecosystem is just the start of many such revolutions. And BaaS is expected to reach a value of 7 trillion by 2030, which has become a must for traditional banks to survive and remain relevant for the future. That's my view.
So institutional investors, now I want to talk a little bit about ESG, institutional investors and retail banking customers are increasingly demanding that financial institutions uphold ESG standards, right? And the view is that our long-term future won't be sustainable if our practices or the way we do business is unsustainable. the banking sector has already realized this, and we're seeing them adopt and work at SDGs. From your vantage, how are you seeing the progress? And, how do you see fintech again, along with banks, becoming a game changer, if at all?
So if I look at the SDGs today, every single one of them requires one very basic requirement as far as money is concerned. And that is the ability to move money, not only faster, but also to be able to get money to locations which are absolutely not on the map, if I can call it the financial map, right? Now, traditional banking is not in any shape or size has been able to answer that question. So the only way that can happen is through fintechs. Right now, the way regulators are looking at fintechs, I would say the bulk of regulators, I won't say everybody, is trying to regulate them from a fraud perspective.
Right.
But I think and this may sound a little revolutionary, but I think fraud is a necessity in banking. It comes as part and parcel of what banking is all about. So to say that we will have a system which will be completely fraud-free is not possible. Fraud will always happen. But if we are to meet the SDGs, then we have to understand risk. And that we come back, to the same thing that I was talking about earlier, which is how do we understand risk? Do we decide that this much risk is good enough so that we can actually achieve what we need to achieve for the SDGs? Or do we turn around and say, no, it's more important to avoid fraud, so we don't take that risk? Then I'm afraid we will not be able to achieve what we are planning to achieve from a financial perspective. So I'm just giving you that correlation.
All right. So basically you're saying that, the fintechs and the banks have to work together. Absolutely. And essentially, to try to reach the underbanked or the unbanked, they are the way forward. I mean, that kind of marriage is yes, the way forward.
Absolutely.
And regulations essentially have to support that rather than, putting in excessive guardrails.
And putting in the right, sensible, practical kind of risk measures. I think that's very important. Yeah.
Okay. I have one last question for you.
Yes, sure.
Especially this is on digital revolution and disruptive technologies like AI, ML, cloud computing, IoT, and all of that. And they've really transformed the way users are interacting with financial services. So how do you see traditional players adapting to embrace all of these technologies and to thrive? And will we see these traditional spaces actually? Do you see this moving fully online? So will banks be resistant in kind of embracing certain technology?
So I don't think it's a question of one or the other. Okay, I think it's a question of adaptation. So let's look at the basic function of a bank. When it was first started, what was banking? Banking was about transactions, right? About being allowed to transact in terms of sending money somewhere or receiving money from somewhere. Then slowly over time, they added a lot of other services to it. So I think what is important to remember is where society is moving and how banking is adapting to that need of society. If society is moving towards actual last mile connectivity, then banking has to be able to provide that. And I don't think anyone has the luxury of saying, like we did in maybe a few years ago, that I am a foreign bank operating in a local area. You can't do that anymore, because then what you need to do is say, I'm a niche bank. I only function in a particular area, and this is exactly what I'm going to be doing. Then you become a boutique, right? But if you are a full-fledged bank, and if your aim is to actually respond to every customer that walks through your door, then you have to be able to be nimble enough to understand exactly what those customers want. And very soon, those doors won't exist. because as we all know, digitization is going to be the answer of the game. Nobody believed that India would have internet the way it did. And from 2000 onwards, the country has completely changed itself, right? I mean, if you'd asked anyone in 1995, they'd have said, what are you talking about? You know, India will take eons to be able to, get, for example, telephones. I remember 1994 when, the first mobile phones came out, they were huge, long, big things. And, we'd carry them and they were just so embarrassing because they were so big. And look at us today. So I think every country sets its own pace. As far as India is concerned, I think we've set a very, very firm pace for ourselves. It's very fast, and banks in India have to adapt to what the populace wants. Otherwise, they're going to become irrelevant.
Okay. I have one last question for you. And this is more from the conversations we had, before we actually began this formal conversation on ET Future of Money Summit. But, digital financial services are designed for people who are decision makers, who are literate, who are income earners. And many of these things are not true for many, many women in India, right? So how do you see and how do you think we can tackle this vast gap between digital financial services and, reaching the women of Bharat?
So, I would beg to differ on one point that people keep making, that, digital services are only for literate women. I can tell you that in rural India, we have seen over the last several years, women who are illiterate, who have never gone to school, but when you give them a phone, for example, they manage to understand it and operate it and actually transact through it very, very quickly. I'll give you an example. In 2000, there was a very interesting exercise that was done by a company called ITC, which was eChaupal. This was done, each was really a system where they would, take groups of, say, 10 villages, and they would, in one of the villages, they would choose a sarpanch who was smart and wanted, to take his village forward. And within his house, they would put a VSAT and a screen. And through that VSAT and screen, they educated those villagers about not just the type of fertilizer that they should use for the grain, but the type of grain they should grow. They did a whole range of things in terms of education for the villagers. But more importantly, they also gave them access to the market. So when I went down to one of these hubs, and I actually sat with the sarpanch, and he showed me the Nikkei index. So this is all commodity exchanges, right? He showed me the Nikkei exchange. He showed me the New York exchange. He showed me London, and he showed me the prices of his commodities. And he said, "Dekho didi, idhar itna paisa ja raha hai, idhar itna paisa milega." Lekin hamare hub mein, because they are smart guys. ITC didn't do this for just the blue eyes of the villagers. They did it because there was a commercial interest in this for them. They actually had set up hubs where they were giving value for the grain to the clients, and they were quoting their price as well. Now, in the mandis, where normally these people would sell their grain, the grain would get sold for, approximately 40% of the value of the grain would go to the farmer, 60% would get taken off by the mandi. But these guys would actually give them 100%, because it's the water in the grain that actually tells them what the value of the grain is. And I was amazed to see that this guy knew everything. So he educated all his other farmers. Every evening they would have a eChaupal where they would sit down and discuss all these things. But the interesting thing was the women. The women learned about banking through that system. So it was the women who actually went out and got insurance policies, which was made available to them by the banks on the computer itself. So it was one computer, 10 villages, all learning through it. Amazing.
Natasha Patel, thank you so very much, for this wonderful conversation. And it's a really lovely anecdote for us to end our chat today. I wish you and your colleagues at ISC all the very best for all the work that you're doing. Thank you once again for your time and for your thoughts today.
Bye.
Hello and welcome. Primarily a cash economy, India has been adopting digital payments at a rate like never before. The industry is booming. The size of India's digital payments market is likely to grow more than threefold from $3 trillion at present to $10 trillion by 2026, as per a report by PhonePe and the Boston Consulting Group. While the growth has been rapid, the industry is still nascent. There are concerns over several structural and technological challenges such as cyber frauds, transaction costs, communication infrastructure, awareness, and adoption to actually bring about the true realization of the potential of digital payments. I'm Maloni Bhatt, and who better to tell us about the road ahead for digital payments than Upasana Taku, COO and co-founder of MobiKwik. Founded in 2009, MobiKwik defines itself as a fintech company providing payment solutions through mobile wallets and the BNPL channel. Upasana, thank you so very much for your time today.
Thank you. Thank you so much for having me here. It's a pleasure.
All right. MobiKwik today is one of the country's largest BNPL provider. Can you tell us about the opportunity for buy now, pay later to change the face of the credit market, especially in a country like India, and to kind of bring about a digital financial revolution, not just confined to urban metros, but also something that percolates down in tier 2 and tier 3 cities and towns?
Yeah, so see, I think first we must understand the context that we operate in, which is a country, India, 1.3 billion people, about 800 million bank accounts and debit cards in play, but only 35 million credit cards, and less than 70 million Indians have ever had access to credit. So we are now a banked market, but if I could say that we are well banked for the top 100 to 150 million Indians. And for the others, banking just means having a savings account and a debit/ATM card. And so therefore, the opportunity for the entire financial services spectrum to get disrupted and rather to reach people and small businesses is very large. The TAM, or the total addressable market, is especially large because like I mentioned, whether it is people who have invested in India, whether it is people who have taken a loan in India, or whether it is people who are insured in India, all those numbers are in the range of 3 to 5% of the entire population. And so therefore, firstly, there's a lot of room for different financial players, banks, fintech companies, etc., to create opportunity. Now, when you spoke about bringing credit, and that's where I want to say that, buy now, pay later, as is understood globally, is very different from the buy now, pay later that has been created by a few fintech companies in India. Because in the global markets, buy now, pay later is an alternative to credit cards. It's a more convenient, smaller duration, very transparent price product available for, disposable income spends. In India, that's not the case. Like I just explained, most Indians don't have even a credit card. And so they're spending with their own hard-earned money sitting in their bank account or their debit card. And essentially a pay later type of product is bringing them their first experience of credit. And the reason, why it can have is having a strong impact is because generally a pay later product is for daily life purchases in India. It's not to buy an expensive purse or expensive clothes or something like that. It is more for daily life uses, whether you want to buy food, groceries, use it for daily transportation, pay bills, etc. And it allows many Indians to get access to credit for the first time, because from a lender's perspective also, it's a fairly small ticket product and the tenure is also small. So it's a good stepping stone to credit test a lot of users very quickly. And of course, for a company like MobiKwik, we started with a large foundation of a payments business where we have about 125 million users and 3.6 million merchants on our platform. And after creating the payment services for them, 4 years back, we wanted to kickstart our financial services journey. And that's where, we started with a very small ticket, 15-day pay later product, which we have now offered to 30 million of our users. But most certainly, this is part of the journey and definitely not the end game. The idea is really to test users via pay later. Then we have already started building on that by offering them EMI loans to buy, a large ticket product or service. And then in addition to that, we will bring them personal loan, deposit products, insurance products, the works. The idea is really to bring the full spectrum of financial services to our users as well as our small merchants, because both of them, have come to our platform for payments, but we have the opportunity to bring all these financial products to them in a very simple manner, on our digital apps. So that's sort of what we are trying to do.
There's been a lot of regulatory pressure and scrutiny, right, on these products. What are the challenges for you now that you're in the space? And, also the whole thing about balancing innovation while ensuring the guardrails that the central bank deems necessary to ensure customer safety.
No, absolutely. See, I think one thing we have always been very, clear about is that, there are all kinds of markets in the world. There are fully open markets. There are completely closed markets. India is a market where financial services has always been well regulated and it continues to be regulated. So unlike, how some people are saying, I don't think the government or the central bank in India is opposed to innovation. I think they are pro-business, they're pro-innovation, but they're always looking out for consumer protection. And like you said, they want to make sure that the guardrails are set up, right from the beginning, so that while innovation is happening at a very fast pace, as you might know, fintech India is the third largest fintech market globally now. So there are lots of companies, there's a lot of fragmentation, a lot of opportunity also, even now. And so lots of companies are trying to solve different problems coming from different angles, different niches. And I think what the government is trying to do, or the central bank is trying to do, is to make sure that we have a common minimum sort of rule book that we play with. I think that last 10 years also, a lot of fintech growth has happened in India. And I think now the regulatory mode is more like, yes, we want you guys to grow. We want you guys to scale fast, bring disruption. But at the same time, we want you guys to, work like mature companies and understand that, you are in the money business. And this is a important business. Nobody likes to lose money for a customer. So I think that, there are several licenses that are available for one to build a truly strong digital financial services business, starting with the wallet license. Then we have an insurance distribution license. We have a investment advisory license. And, whether it is for doing credit businesses also in the country, there are NBFC, small finance bank, etc. licenses available. So I think that the right players will do all that is required, to make sure that the business is protected from regulatory overhang, and at the same time, a rule book, that the government has laid out. In many ways, I think it's a very interesting DNA that one needs to succeed in fintech in India. I often joke about it, but the clear analogy in my mind is, not only does one need to be, from an entrepreneur or leadership team perspective, super strong on product and tech innovation, but also you need to be really strong on compliance and the regulatory landscape. So in a way, fintech founders in India need to be half parts Zuckerberg-like and half parts, Mr. Kotak-like, to get the equation right.
Is it a real challenge?
It is extremely. I mean, like in anything, you want to find somebody that is an expert in one thing. It is always easier to find. If you want to find somebody who's an expert at two things or three things, the pool of people who are able to balance that tightrope, is really small.
Does that mean, that fintech founders, with the kind of regulatory environment and atmosphere that we have, are now having to second guess, recheck, doubt before moving ahead?
No, I think there's no question of second guessing and rechecking. See, I think it's very clear as to where we are today, and it is also evident based on the noise that you hear or the draft papers that come around, that what's going to come in the future. So it's not as if you have to second guess, but yeah, I think one has to, if one is going to have a right to win, then one must be ready, with their chess moves, a few steps ahead of where things are in reality. So it's not very difficult. Like I said, that it is easy to understand, what kind of licenses gives one the ability to build any and all products and services that one likes. One just needs to make sure that we make investments on the regulatory side also in ensuring that we have all the licenses and all the umbrella licenses that can protect us from any further, knee-jerk notifications that may come around. So I think the stress or the focus in most fintech companies is always on scaling, growth, and whatever is their target, whether it is consumers or merchants. I think that now they will have to make sure that there is more focus on regulatory compliance as well.
And you don't see it as a bad thing necessarily. India, as you said, is set to be one of the biggest fintech opportunities and markets. What are the top 3 trends that you see in the digital payment space taking off perhaps in the next decade?
So see, I think that the first thing is that payments has and continues to be sort of the bedrock. So when you think about the whole digital India mission, what Modi ji talks about, whenever people are getting digitized, they're getting smartphones, the first thing they start with is content. And then when it comes to money, they start with doing one bill payment or one P2P transaction or one QR code based payment. That's sort of how most Indians are starting their digital payments journey. Payments becomes the bedrock. And I think right after that is where, people have started now thinking and focusing on very clearly that can we bring credit products to consumers as well as small businesses? Can we enable them to also, if they have excess cash flow, is there a way for them to earn stronger returns, from their excess cash? I think that getting more and more people to invest money in short-term products where there is strong liquidity, I think that is becoming one opportunity. We see a lot of companies that are, either trying to get people to invest into mutual funds or deposits or stock market. So I think that is one area that there's a lot happening. Credit, of course, is the flavor of the year, and maybe for the next 5 years, we'll continue to see a lot of action in the credit side, most in all cases. I mean, whether it is credit for a particular use case, whether it is for working capital or merchant advance products for the small businesses, whether it is a term loan or personal loan products for individuals, especially self-employed individuals, because India is mostly self-employed, and there's a huge gap in terms of demand and supply there. Then if you also think about InsurTech, I think that is also coming up in a big way. I think there are a lot of opportunities there. The traditional distribution model, has always been focused on, the top 50 to top 100 million Indians, where their earnings are higher. And so the insurance premium that they will buy will be in thousands, of rupees. And the loans that they will take will be in lakhs of rupees. But interestingly, 90% of India, in terms of their earnings, are falling. Per capita, we earn, less than $600, $700 per month. So therefore, most of India actually needs, whether it is investment SIP products, whether it is insurance products, or whether it is credit products, everything needs to be in sachet sizes, smaller sizes.
Smaller.
So like somebody wants a 1 lakh rupee insurance policy, the premium that they can afford is 100, 200 rupees. And if you see, most insurance players and large insurance platforms, they're all focusing on higher ticket products. Because that's where, they are able to make better margins, and the cost of user acquisition is not a big challenge for them. So therefore, I think the main disruption that is going to come in all of these legs. I think that deposit taking, credit, and insurance. We have seen a lot of action in credit in the last few years. I think insurance and investment products also will start see extremely strong interaction coming from fintech players rather than incumbent financial institutions. And I strongly believe in the concept of collaboration and partnership. I think most of this will come in partnership with bank entities, large insurance companies, where they will be the OEMs. But I think a lot of the distribution plays will come by virtue of these large licensed entities partnering with the right fintech partners.
Okay. Now I want to focus on payments. My vegetable vendor, my green grocer, everyone, I mean, they all accept digital payments, right? But in India's villages, there is still some sort of a reluctance. Could be about the lack of awareness of how payments work. But another issue is dispute redressal, which could be consuming dispute redressal, right? So there could be issues of internet connectivity. How do you see those being tackled and, being the stumbling blocks for us when it comes to payments?
No, you're absolutely right. And I think before I address your point about consumer redressal, I think it's more about consumer education and awareness. So again, as a country, even today, only 250 million Indians, 250 to 300 million Indians today are transacting using, apps on their smartphone. And so there's a lot of, opportunity, and every day, more and more people are starting to transact digitally. And actually, I want to tell you that stronger growth for platforms like ours, not only on the payment side, but also on the credit and financial services side, is coming from the tier 2, 3, and 4 cities and towns of the country. Why? Because, in these places, the access to specific products and services are more via e-commerce, because physically many products and services are still not available in smaller cities. And so these people are more keenly adopting digital. And I don't think that internet is a big challenge. I mean, I think Jio and Airtel and all the telcos have done a great job. I think in many, many remote parts of the country, you're able to get very strong, internet connections. We see that on our platform. We are doing now our credit products in more than 300 cities and towns of the country. So I'm seeing lots of smaller cities give much stronger adoption, where more and more users are actually repeatedly using the app, and not only are they making bill payments, but they're also doing a lot of e-commerce purchases, and they're also showing interest in using the credit products as well as the insurance products. So I think that a lot more of the growth opportunities will come from these, less from the metros and more from the smaller cities and towns. And so we are very excited, about that, because that's really the impact story. I mean, that is sort of the reason that we started MobiKwik, to really get financial products to reach the masses of the country. Now, when it comes to trust and dispute resolution, and I think there are two challenges there. One is that most of consumer internet in India, e-commerce companies, payment platforms, everything is in English.
Yeah.
We have not yet localized to several regional languages, and because there's a huge cost associated with it. And until now, last 5-10 years, stronger growth was coming from metro cities, where of course English adoption is extremely high. So that's one. So I think because many Indians are latching on to digital systems for the first time, their awareness and education of how things work, is still behind the curve. I mean, we receive many queries where people are like, I'm not able to complete the payment. It says, put your one-time password. What is a one-time password? Where do I get my OTP? So see, I think some of these are real questions. These are commonsensical questions, but I'm just saying that level of overall consumer education is not very strong in our ecosystem, because most of India was running on cash for so long. So I think, the government, banks, etc., have to help the economy, and maybe we have to spend a little bit more on educating our users. So I think that's happening. That there's a challenge between people interpreting that how things work. And then you rightfully said grievance redressal and dispute resolution is also a challenge, because we have lots of players in the ecosystem, both on the e-commerce as well as on the payment side. So while there are some large platforms, both for e-commerce and payments, there are also lots of small players. And many of these people are not spending enough in terms of their FAQs, customer education, customer support policies, and it's creating more chaos, so to speak. In fact, we all talk about how UPI is now, we are one of the fastest growing nations in terms of digital payments thanks to adoption of UPI. But you will be fairly shocked to know that, let's say you make a UPI payment to a vendor, and if the vendor says, I've not received the payment, but you see that the money is debited from your bank account, you try to contact your financial institution to get this transaction either completed or refunded. It's a nightmare. And that's just because the sheer volume of the transactions is so high, and most of the banking platforms, they have not prepared any sort of digital intervention systems or support systems to help them manage this. So calling a call center, like if at any given moment of time, there are like thousands of such transactions failing or in disputed state, it's not going to be possible to support grievance redressal for them, using manual call center operations, etc. It has to be digitized. And I think is again one big opportunity where users are finding themselves a little disadvantaged right now. But I'm sure that in time, more and more automated systems will get built, so that in such cases, there is automated notification that, in few hours, this transaction will update, and don't worry. And either the transaction will go through or the money will get refunded. So some of these things, and especially with some of our older cooperative or, even PSU owned banks, I think there's a lot of opportunity for more digitization to make access to this transaction information sort of more real time.
There is this other area of concern, which is privacy. Various parties in the payment chain can track an electronic purchase. The information could be used to profile, marketing purposes, can be shared also. How do we then balance, say, commercial interest with the privacy of the consumer?
So see, I don't think we have yet a data protection bill that has been ironed out, but I'm sure it will come out in time. But I think until such time, we have seen that there has been a lot of change in the last 4-5 years also. Like I remember a few years ago, even a gaming app would track a lot of information about the user just from their app on the user's phone. And as opposed to now, thanks to the government's focus on it, and also Google Play Store, etc., have strengthened their policies. So I think this is also one of those tightropes where there will always be people who are interested in consumer protection, but I think some of those people I've seen the last few years also. I think it's a balance. So we can't be so conservative to the extent that we are trying to be woke about consumer privacy, consumer protection, because what is more important for somebody who earns 1 lakh rupees per month and lives in a metro city may be very different for somebody who earns 25,000 rupees and lives in a smaller town or city in India. And so the case in point I'm trying to make is that few years ago, all of us were used to using the Aadhaar APIs for KYC verification.
Yeah.
And then few years ago, there was an uproar and, it was in Supreme Court, etc. And except banks, nobody could use Aadhaar. Now, I don't know whether, that was helpful or not, because for many people, they are not able to get so many products and services in their life just because they're not able to complete their KYC and police verification and all of ID verification processes. So a centralized API, which allows them to readily identify themselves to any service provider who can provide them a product or service if their identity is verified, I think it's an excellent use of technology. Were there some people who, some entities who misused it? Of course they were, but the answer to that is not that. I'm just giving this as an example. The answer to that problem is not to completely abolish the use of digitized products or services and telling everybody now go back to paper. Now with every application, submit your PAN photocopy, Aadhaar photocopy, some other XYZ things to prove your identity and everything. When we have built API based services, we must use them. They bring efficiency. The right tools to implement at that time would have been to have hefty fines and penalties or to entities who are misusing it. I mean, the penalties can be as huge as tens of crores if there were entities that were abusing it. But I think that this is one example where I think we need to have a balanced view, because we need to understand that we have still many people who are not literate in this country. We are people who are literate but are only equipped with Hindi or native language processes and are not able to do things efficiently for themselves because of the English barrier. So I think to that extent, if identity verification services, etc., even credit assessment facilities. So there is no difference between a user furnishing photocopies of their salary slips, of their bank statements, or giving access to their recent last 3 months bank statements from their bank account itself. Whatever is convenient for the user should have the right to choose. So my thoughts on this is that the user should have control, the guardrails need to be strong, and the entities who abuse it need to be thoroughly and heavily fined.
Okay, I have last two questions for you. One is about the larger scenario, given the inflation world over, the possibility of recessionary scenarios in US and Europe, markets which are following lackluster listing of certain startups in India. How do you see the environment shape up in the next 6 to 12 months? And how does this impact your plans for listing?
No, so I think I'll not beat around the bush. I think that, like you rightfully said, globally, stock markets, capital markets are not in a great shape. They're volatile, and even listed companies who have a strong track record of profitability for years and years right now are taking a beating in terms of their valuation. So it's definitely not a conducive market for anyone to get listed, not in India and not in US, not in any major market per se. But I think that's okay. I think markets turn. I mean, we had a very strong bull run going on last year, and I think this is the year from that we have come to a place where everybody's being very cautious. I think this will probably continue for a few more months or quarters, but turnaround will come. The markets cannot be low forever. That's the whole point of a market which is driven by what's happening in the macro. So I think that good companies have a strong opportunity right now to capitalize on this time, build out their businesses, grow very nicely, strengthen their business, show scale, and also be profitable and show quarter over quarter profitable growth. And I think with all of these things in hand, as soon as the markets are back, whether it is in 6 to 12 months, we will see. But as soon as the markets are back, there's no reason why strong companies showing good financial performance should not be able to come to the market and get a warm, reception.
And so that's your horizon for MobiKwik as well? 6 to 12 months?
So I mean, as you know, MobiKwik is very much on the IPO track. And, in order to IPO, you need a good market, you need good financial performance, and you need the regulatory approval. So we, got the regulatory approval, we have that in hand. And, once it runs through, we'll make sure that we have another renewed approval available. We are continuing on our growth journey and using this time to aggressively grow, while at the same time, making sure that we are a rare fintech in India that continues to be profitable. Last 2 quarters, December 21 and March 22 quarters, we have been profitable, and we intend to, continue our growth path in the same manner at the break-even profitable status. And yeah, I think we intend to be ready at all times, quarter over quarter, keeping ourselves, audited numbers in hand, so that as and when the market is, back, and when our, team of investment bankers advises us, we'll be back on the IPO track.
All right, and we wish you success there. My final question to you, you spoke about growing aggressively. Any new products that you're looking to launch, and especially growing, as you say, in tier 2 and 3 towns and cities?
Yeah, so see, we are continuously, I wish I could tell you about one product, because we are very much a app-driven company. And so we release new updates to our app every 15 days. I think right now, so last few years, like I said, consumer facing credit products, whether it's a small ticket pay later product or whether it is an EMI product, have been our focus. Right now, we are very focused on introducing similar products on the small merchant side. So we also have 3.6 million merchants that accept payments via MobiKwik. And for many of them, we are now making a card product available, and we are also trying to bring our credit products, to them. Because most of these merchants are also, along the length and breadth of the country. And while they may not qualify for a credit product from a large bank or financial institution, based on their data with us or their receivables via us, as in, every day users are paying them and we settle them money, right? So based on their history of GMV that they're doing on our platform, we are able to underwrite and provide them in partnership with our partner banks. We are able to provide them credit products. So that's a big area of focus for us.
All right. We wish you continued success. Upasana Thakur, thank you so very much for your time and for your thoughts today.
Thank you. Thank you so much. It's a pleasure and honor to be here.
Hello and welcome to ET Future of Money Summit. India today is known to be one of the largest growing fintech markets. According to accounting advisory and tax services firm PwC India, the country's fintech market is likely to expand to $1.3 trillion by 2025. But this was not the case in 2001, when CC Avenues launched India's first non-bank payment gateway. In 2016, CC Avenues merged with Infibeam, an e-commerce marketplace, to become Infibeam Avenues Limited, as it is called today. It's now gone on to be the first fintech company to be listed on the Indian stock exchanges and be profitable. I'm Miloni Bhatt, and I'm very pleased to welcome Mr. Vishwas Patel, Executive Director, Infibeam Avenues Limited, and Chairman, Payments Council of India. So welcome to the show.
Thank you, and hello, everybody.
So first, I want to talk about Infibeam. You just launched something in the market. Can you tell us a little bit about this innovative technology that converts any NFC-enabled Android phone into a point-of-sale terminal?
So, Miloni, before we go into the app, the reasoning is always important. Why this app and why it will make it. So, you'll have to understand the India's digital payment scenario. Like any India digital payments ecosystem is very similar to a marketplace ecosystem. So, like if you have a marketplace where you have all the sellers and no buyers, it will not work. Or if you have all the buyers and no sellers, it will not work. So both have to grow together, right? So in India, in the digital payment ecosystem, there is one side issuance and the other side is the acceptance part, right? Just like in the marketplace, buyers, sellers, we have issuance and acceptance. In issuance today, in our country, we are sorted. In a sense that today, if you see, there are more than 900 million debit cards in the market, ATM debit cards in the market. There are around 70 million credit cards in the market, 260 million prepaid instruments in the market. Then there are 100 million plus UPI IDs. So you see, anybody, any Indian can just walk into any branch, say a Tamil Nadu Cooperative Bank also, and open a zero balance account, and he gets a debit card and he gets a PPI. So on the issuance side, we are sorted. Almost everybody, even who are in the anyone above 18 years, more or less has some kind of a payment instrument which can be easily got or has already. So issuance is solid. Acceptance is where the problem in our country is, right? It has taken years for us over the last 20 years to see today where we are like #1 in the world in real-time payment transactions, right? More than even US, China, both put together also. So the way what we have transgressed on this acceptance part is still a problem. We still have a lot to solve on the acceptance, and the maximum, even RBI has a PITF committee, that is a Payment Infrastructure Development Fund, where RBI has put money from its own pockets and including some of our network members who have put in a couple of 100 crores to grow this acceptance base. Now, in this acceptance base today, what do we have? We have this point of sale terminals, where you go into any shop and they swipe the card. Those cost around 8 to 12,000 rupees, and there are only 6 million POS transactions, POS terminals in the market. For a market size of 150 million, SMEs in the market, there are only 6 million POS terminals, right? And why it's not growing? Because, it's a high cost of POS infrastructure, it's inaccessibility of users, lack of technological know-how, difficulty in servicing in far off places in villages and towns, right? They're trying to send them battery problems, sending them printer rolls, all those stuff, right? And imagine giving this machine, and then there are constant RBI regulations where you have to keep upgrading the new security, accepting NFC, accepting Aadhaar, all those stuff, right? So you have to keep changing the machines, right? And plus that, this kind of expenditure, when you have to put a terminal, is that money made in the margin? Can you give it to a street vendor in a tier 4 village or town, right? So that's why it's not growing, right? The second part of the problem is that now post demon, there are a lot of QR codes that have come in. Now with QR code, it's good. It has made a massive gains, but then that is again limited. When I said that there are 900 million credit cards and 70 million 900 million debit cards and 70 million credit cards, can they be accepted through the QR? No. It's limiting to UPI and other things. So they needed to transgress something where it makes it very easy for a village, for a kirana shop in a village also to start accepting. So with the penetration of 4G and network and mobile connectivity available even down to the grassroots level now, and with even the BharatNet fiber, which government is trying to do at every village level also, fiberizing the villages. All those things now make it easier for the end kirana shop has a mobile phone, right? How do you make that mobile phone a POS terminal? So that's why we launched this, our NFC-enabled CC Avenue POS. It's like you just go to a Play Store and just download the CC Avenue app for business. All the kirana has to do is a very instant onboarding with online eKYC and other things, and you can start accepting. When a consumer comes to his kirana stop or say at a food cart on a street or a village street, if the customer gives out his RuPay debit card, he just has to take and tap it at the back of his phone, and the transaction will go through. And there is no amount limitation also, because it is India's first PIN certified, so POS, PIN on glass certified solution. So even if it is a 8,000 rupees transaction, you can put the PIN on the glass on the phone, and the transaction will go through. So it's that revolutionary, where no need to go and explain. A kirana store or a fruit vendor can just download from the Play Store, just like how he's downloaded YouTube and other things, and start accepting payments. So that's the kind of revolutionary. It also has QR code. It has an inbuilt sound box also, so that he knows that 100 rupees is successful in multiple languages, and many other features, payment links. And so this is what we are trying to do, if you understand how we can solve this acceptance conflict.
Can you tell us how the offtake has been?
It has just been launched. In fact, 3 days back, we launched it with all the 3 card network heads launching it in BKC. The offtake is huge. The use cases are huge in a sense that today we are talking to several restaurant owners who has like 30-40 delivery boys. So we have a user management where each of those boys in their phone can also download the app, and the main notification goes in the parent app, where even the main merchant can see the transactions coming in and all that stuff. So lot of use cases, lot of places that we are doing this. I think that the results will be shown in the coming days.
All right. Okay. Vishwas, I want to talk about Infibeam Avenues. You've been one of the first fintech companies in India to be listed, and one that is profitable. From your vantage, what are the 2 or 3 key takeaways that can benefit young startups, especially today? You were a young startup at one point. Especially right now, when money is very tight all over the world. There's a huge slump in the US markets. And of course, the financial performance of some of the startups in India itself, has been really, really underwhelming.
So great in Meloni. So when the going is good, then everybody is very, gung ho about everything. Small startups with this thing are suddenly unicorns. And now once the tide has changed, then their words start flowing that they are looking to conserve cash. Frankly, it's very sad to see anybody, firing people. It's hard time for everybody on the ground. Like even for the long time, huge amount of money was being printed in the West and were relocated then sent to India as funding, because the cost of capital is negligible there, right? And when you put all this kind of dump, the problem happens is the sense that when youngsters starts getting access to such kind of money, right? And then the plans and the way they destroy the fabric of a particular vertical. So my take is that any vertical where the VC and private equity comes in, if you see that vertical, the biggest loss maker is the leader of that category, right? And why does that happen? It's because of the very excessive growth beyond what is possible. You're spoiling a lot of things. Like even in a fintech market, if you see, you're going to the bigger merchants and giving them at below rates, right? And if you say that afterwards I will increase the rates above my cost, it's not going to be possible, because merchants once used to that, you start paying employees an obscene amount of money, right? And you try to spoil it. And what happens is now once the times are bad, you're firing that people. Now that person also, the employees also, is now used to a certain lifestyle for the last 1 year, 2 years. They will have to eat a lot of this thing to, then go into a stable company, right? And then go take a hit on their pay scales and even the other thing. So all those things are a problem when it comes to big ticket funding. So the idea here is that has to be a systematic growth. You see most of the biggest profitable company in our country, which is self-funded, like Zoho or even Zerodha and all those, they have gone ground on ground, built basis long term. Even same goes for us, right? We have, even despite so much. So typically, if you understand, it requires a lot of maturity to go a systematic growth. You need little patience and you need to keep growing. And for us, while the youngsters who have come in, who have become fintech unicorns, are focusing on the top 200, 300 merchants and getting the volumes and able to raise big money, we are actually trying to increase the base. Like today also, when I'm sitting with the team says that in 4 states alone, there are more than 1 million education institutions which are not accepting fees online. For us, that is the market. That's where the change requires. Like, why does that school not accept fees online or through digital mode? So those are the things that we are going after, the long tail, while they keep fighting among the top 100, 200s and trying to break rates and go into losses. So my take here is that there's a lot of patience that is required, that this is business at the end of the day. You have to create value. While if you get access to funding to build that technology, everything is acceptable. But to burn thousands of crores being just in the payments business, right, is not acceptable. And then you suddenly think that, okay, I will burn in the payment business, but I'll become a share broker, I'll become a mutual fund broker, I'll become an insurance broker. So those opportunities lies, but is that money, will that person who's come for you for payments, will they be taking those? Is something you'll have to investigate. So that's my idea, is that have a long-term view. All the big payment companies, be it in US or China, are making good money from processing itself. Forget all the value-added services are a big bonus, right? But processing itself is there. So you start putting in this kind of undercutting and go into thousands of crores in a payments business, which requires only 300-400 people, 500 people. Why should you be doing thousands of crores? So that's a question to be asked in the long term also for everybody.
Do you think these young startups are asking or beginning to ask these questions now?
Sure thing, because once the funding dry ups and then they do all this sudden acts of, firing hundreds of people and then cutting down on their those kinds that you keep hearing in the last couple of weeks, Meloni. So definitely they will be asking it, let's build a long-term sustainable, and ultimately they have to go IPO. And once you are listed, you have to look at profitability. There's no other ratio that works in the stock market. be it earnings per se or profitability. So all of those even listed now as thinking profitably, that's where the real value comes in. Miloni.
Yeah, and how does all of this impact the market and the opportunity for fintech in India in the long term? If you say that we have a lot of these startups or young businesses that think in this manner.
Right. Look, the business can be grown if they focus on the right fundamentals and the right problems to be solved. Right. Today, if you see in India alone, the fintech addressable opportunity, Miloni, is around 5 trillion to 6 trillion by 2026. All reports, be it BCG or all those reports say it's a 5 trillion to 6 trillion opportunity that is there right now. Today, if you see, cash still accounts for 72% of the consumer spending. Right? There is still 29 lakh crores of cash still in the market. Right? And when you look at all the other associated opportunities also, when we say that is there, it needs, as I give you an example, that there are almost so many million schools and this thing to accept fees online. That's a real problem to be solved, and you need not just give them a vanilla payment gateway, but you have to build platforms that makes it easier for that school to go online within 10 minutes and accepting, where you make the entire horse before the cart and kind of thing that you have to put in so that it becomes easier. So you have to start working on the real life problems. And apart from that, even for the SMEs, today also almost 40% of the MSME credit is through informal channels. Right? Once they become digital, they become credible and they become bankable through when they start accepting digital payments. A lot of things. Today, if you see, India is credit stuff, right? Today, it's around 11% of our GDP is only credit what is there. When you compare to a mature market like US, it's 84% of the GDP. So the right credit way, when you give it on a logical basis, not abrupt, you're given this much amount, this much, but you give on logical on their reasonings of, say, someone has got a work order, you discount that invoice bill, you give them working capital, you give them to many others consumers who have a fixed salary, and then you want to build that consumer base. Those are the logics that you have to do. You can't go blanket out just to raise some VC money. Get it? So the logical. So even today, our investments, the population, less than 3% of our population invest in savings in equities and mutual funds. Also, if you see insurance, what is our coverage rate? With premiums at just 4% of the GDP, and in US it is 11%, right? So, and all in all, if you see, our country is still the fastest growing economy in the world, right? And fintechs will have a massive opportunity to scale even further. So my advice is that look at these opportunities, look at the long-term goal, don't look at short-term taking on this thing just to raise money. There are a lot of problems to be solved. We have to fight. Our fight is against that 29 lakh crores. How can we make India a less cash society? That should be the real reason, not to raise money and just grow and become unicorns overnight. That's the thing.
Right? Okay. Staying with the landscape and the opportunities for digital payments, as per a recent Deloitte report, India is to have 1 billion smartphone users by 2026, and internet-enabled devices in the rural market will also get a push. And you spoke about this, especially with the BharatNet program. Now, how do you see this? Or can you lay out for us how this will further change the landscape for digital payments in India, and what is the scale of opportunities you see emerge out?
As more users grow, the whole key is on the acceptance side and how we can get digital payments is such a thing, Miloni, that if a student is making a payment to his tuition teacher, right, then or tuition teacher, we need to digitize that. Right? When a tuition teacher goes to a kirana, you don't want to go to an ATM, withdraw cash, and then pay to the kirana. The tuition teacher pays to the kirana, that has to go through a direct digital payment, not a via media. To eliminate the cash portion that comes out of that ATM and other things. Once that kirana pay to its distributor, that should be digital. Distributor paying to the manufacturer should be digital. Manufacturer paying tax should be digital. So opportunity wherever, what is commerce? Any product or services delivered or sold and payment made. That payment made is the big opportunity where we have to get. We have to look at million use cases that is there. The smartphones penetration, the 4G and the upcoming 5G and everything is sorted right now. Right? Is a lot of things will also, it will further improve. So what the opportunity is looking at the structure and the infrastructure. Like if I were to pull in my what we do at Infibeam Avenues, maybe that will give you a brief idea how we are thinking through it. So I have shared certain images which you can maybe take them for the users. But if you look at that, what is a fintech universe? As a fintech, what should I look at? How does a fintech earn? Like fintech has three people from where they earn. One is the merchants, like how we go after the merchants and enable them with all the digital technology, whatever that is there required, right? The other part is the banks. You as a fintech develop awesome technology and you give it to the banks, right? And the third is the consumers. You go direct to the consumers and then give them buy now, pay later, and all those other cross-selling services and other things that is there. Now, the first two, giving to merchants as a fintech and a banks, does not require you to be a unicorn or need billions of dollars, right? You can scale very fast. It requires very less to build that technology and very easy to market. You can market it out. You require limited amount of money, right? So those fintechs who are in this space are almost near profitable or making money like us, right? It's the consumer payment gateways who are giving out all this BNPL and UPI ID, like I would say like a phone pay and others, which requires thousands of crores to market to build that base, right? But then they have to give out that credit to the end consumer. This consumer payment gateways is where the maximum money traction is going. So if you are a startup and you're looking at this thing and opportunity of this billion, I would suggest how we are also focusing on the merchants and on the banks right now. Consumer part, anything requires thousands of crores to burn, and there is no loyalty on the consumers. And the merchants, at least when I'm giving the system and they are closely integrated into their system, there is stickiness, there is enhanced margins, and there is other things. Consumer today, okay, you'll give cashbacks and this thing. Tomorrow somebody on another chargeback, new player will come in with a new $1 billion raise. Consumers will sip. We have seen like in the last 20 years, so many big websites used to be there, Fashion and You, and so many, I can name at least hundreds who were there earlier, who came discounted and then gone away, right? So from the long-term perspective, this is there. Now from the fintech perspective, as far as the merchant is concerned, you have to understand we have three businesses for merchants, right? We give them platforms, we give them payments, and we give them finance, right? For a merchant, what does a SME, MSME do, right? When we give them platforms, why the platforms? Because we see when I went to, if you take the second image that I have shown, right? If you see on the merchants, what we do today, we have 5 million plus merchants on our platform. When we give them platforms, we have built multiple platforms. Like one of the platforms that you see is Res Avenue for the hoteliers. How did it came about? When I'd gone to a hotelier in Delhi, right? And I said that, okay, ye mera payment system laga do. He said, "Bitara vanilla payment gateway ko main chatunga. I need the whole booking engine on my website and distribution engine to the OTA." That's how Res Avenue came into picture. With that platform today, 3,500 hoteliers can go live within 5 minutes. They're already using it, distributing it to all the OTAs like Booking.com, Hotels.com, Expedia, MMT, Go India, GoIBO. All are pulling real-time feeds from there. So in one place, the hotel gets everything, and there is digital payment links embedded everywhere. All the transactions happen. So platforms is like putting a horse before your payments cart. It also becomes a mode. It gives enhanced margin. It gives stickiness. Like for the government, the entire GEM platform, the government e-marketplace, it has a gem.gov.in. If you go to the website, you'll know. Entire central government procurement goes through our GEM platform, which we have built and managed for the government, right? Today, there are like almost 47 lakh sellers on the platform. Last year, PM Modi just tweeted 2-3 weeks back that it did 1 lakh crore in a year, the last financial year. It is about to go to around 7 lakh crores a year, the entire procurement. The whole platform is possible. That's why this business, that's why what it helps is that, there is elimination where, government has passed rules that any public government officer buying through the GEM platform, there is no CAG audit. Right. So that's why it gives confidence to them to buy. He does not have to take 10 signatures of officers. And that's why indirectly it's helping us in the global corruption list where we are improving year on year, even on the ease of doing business and other things that is there. Today, the AIMS canteen, the AIMS hospitals, the Army canteen, KVIC, so many government departments, almost 44 million plus government departments of central government have gone and started procuring to GEM. So it's a platform along with the payments that you build, right, for the government platform. Similar platforms we have given to the GeoMart platform, the Jumbo Electronics in the Middle East, Axiom Telecom, Saudi Telecom, STC, many other platform deployments we did. Platform with payments is very important. That way, same like we have done for Bill Avenue for our utility bill payments, where you build the entire framework where we have now 7 lakh agents across the country. You know, all these mom and pop shops across every railway stations in every city and town, jahan pe bill bhugtan kar sakte ho, train ticket book. It all flows through our Bill Avenue platform, which is digitized for them and accepting digital money transfer and everything going against cash. So you put platform with payments built together. Similarly, we have Go Payments, we have many others that platforms. Payments, CC Avenue as a payment gateway, what we are now innovating with the new omni-channel app, which is ours. That is the payments part. Today, we are doing almost like 1,70,000 crores of processing, more than 5 million plus merchants, and it's growing. So it helps collect. And the other side is the finance. Now, when you have data, like when I have a merchant, I know he has to deliver 7 lakh rupees, but he's got the order and this thing. He has got an order. Now he needs money, working capital, right? And knowing his payments history, he's done fantastic. He does around 2-3 crores of payments in a year, month, no chargebacks, good return, no return policy, everything perfect. Based on that data, which is apart from the typical other data that is there in the credit bureaus and others, this data is so intelligent and real, and where we can pull the GSTN data and others and give out credit, right? So we can be a good intermediaries to a banking partner. So something like we introduced like express settlement, where typical payment goes T+2 or 3 to them. Some of the merchants like this mom and pop in that road, he has to prepay 10,000 rupees so that when the customer comes in, he can do up to 10,000 rupees a ticket. Now, when I give him express settlement, he can do 40,000 a day. You know, every settlement he requests settle, I can give him another 10,000, 10,000. So he can grow his business. So that kind of lending, plus giving all of these things to this is invoice, working capital, and other things. So that's how we are playing on the platform and payments. Similarly, since we have built all this technology, if you see the third picture that I have given, we do a lot for the banks. Like banks today are, it's banking itself is such a huge domain, right? So giving end technology, transaction enhancing features to the end merchant is not their core competency. And that's why the fintech banks partnership works wonders everywhere in the world. So typically we have given the entire payment infrastructure to big banks like JP Morgan Chase, even in India, HDFC Bank, ICICI Bank, Kotak Bank. In UAE, it's Masrek Bank, one of the biggest. In Oman, Bank Muscat, which has like 80% market share in Oman, is using the CC Avenue platform. So it's the platform what you have developed, you can give it to the banks and make money on every transaction, every merchant ID opened on them and other things. Similarly, we also do that finance-based disbursement help, because all these merchants want finance, and this guy's main job of a bank is to do lending, right? Take deposit and lend, and that's the arbitrage that they earn. So in this lending mechanism, we play the midwife's role of helping from year to year below. And last is the NUE payment network. That's something which RBI is coming out with a license with. We have partnered with Reliance Industries and Geo Platforms and 2 other global majors to be part of the consortium. It is like a Visa and a MasterCard. Today, Visa, you know, in US is like a $500 billion market cap company, more than JP Morgan and Goldman Sachs there in market cap. And what NPCI has done is truly brilliant, but we believe that I think once a private, like in America, there are 5 networks, American Express, Visa, MasterCard. Why should our country have only one? Diners Discover also is there. Why should we have? And in private also, we can also innovate more. Why should every bank in the world issue only Visa and MasterCard? Why can't they have our branded cards from India issued everywhere else? So that's the logic. That's the big opportunity, how we are playing it. So platform payments, this. So if the fintechs understand that if they are focusing on the banks and the merchants, then they did not raise hundreds of millions of dollars. But when they're going for a consumer, they should be ready to burn.
Okay. Thank you very much for giving us that detailed overview, of the business. I want to talk to you a little bit about regulations. The Reserve Bank of India has unveiled the Payments Vision 2025 document, and that proposes to host innovative payment systems and regulations for big tech, fintech, buy now, pay later systems, and an introduction of the central bank digital currency, among many other things. Now, what are your views on the regulations and the guardrails that the central bank deems necessary to ensure customer safety, but also foster innovation?
So that's the thin line RBI should be maintaining innovation with, as well as the fostering growth, as well as looking at security and other things. Now, what happens? I'll just give you a practical example. Like, look, after the passing of the Payments and Settlements Act, right, 2007, RBI has become like God for the digital payments, because they regulate and they keep up. And even if you see in the last 3-4 months or 5 months, when we want to plan something, we say, my people say, me hold on to your horses. Let's look at RBI website and notifications and see what new has come in, and we have to go towards that. Right. So RBI is continuously monitoring. The problem, what I foresee on a personal level, not from the PCI whom I chair or this thing, or in my company, on a personal level, I feel like RBI is like God. They tell us what to do, but they never tell us how to do. And just like in religion, where God says that these are the good 10 commandments, or do whatever that is there, it is the mid guys who are there, like the Brahmins, the Maulvis, who misinterpret and create this thing. In this time, most of the times it's the banks and other things. Like, IVR was the best channel. Like when IVR was working, it was the easiest for us. What we innovated in 2008-9, giving that IVR machines, IVR in this thing, very simple. It does not require internet, it does not require a smartphone. Anybody, you just do this IVR, want to make a payment, then just put in your 16-digit card number, OTP comes, you just put in, and then the transaction goes through. It was the simplest, and it could have scaled very well in those days. Then RBI came out with regulations that before every transaction, there has to be a system where the customer is notified. Now, all the banks, just like the God has said that this is what you need to do, a second factor authentication, all the banks put their own thoughts and destroyed the IVR system. Today, IVR is as good as negligible. It's gone almost that way. So what some banks did is that before making a IVR transaction, you should send an SMS to 5778 or 5886. All banks have different codes. And some that after that you do it, you'll get a IVR SMS code, transaction code, which is some say it's valid for 3 minutes, some say 5 minutes. And in one case of other bank, it was 24 hours validity. So all those misinterpretations happened, and then nobody could just do an IVR transaction. And most of the banks stopped sending those OTP or this IVR card for debit cards. Our debit card is bigger because we are a debit society more than a credit society in our country. Right? Jitni chaddar hai, utni philai hai. So India is a debit society more than credit. So all those transactions stop. So IVR drops. Similarly is the case here also, when all the regulation that RBI is coming in, right? RBI says that you do this, you do that, like you do standing instructions. It created a lot of problems. Even today, I would admit that it's still not sorted. Some of it similarly goes for tokenization. Now, tokenization, RBI said it will be done only by the card companies, that is the networks and issuing banks, right? Now, and they said that this is the deadline, which they extended to last time to 30th of June, that they have to do it. Now, what happens is that the networks and the others get ready during that time. After they are ready, then the acquiring banks integrate, then the aggregators like us integrate, then the merchant integrate. What happens is by the deadline, most of the aggregators are putting most of the networks are putting on the deadline, they are matching there. What about the bottom? So if the regulation comes in, if the says how to do, RBI says that this is how you do, the network should be ready by 31st of January, you should be ready by, the acquiring bank should be this. When RBI is putting in certain things, I think best thing is to, make it little abruptly clear and have this. And of course, when even in tokenization, RBI then got all the stakeholders involved, and that did a lot of last minute fighting with everybody to get it up there, right? But still lots needs to be done. And the problem, Good part is that I think little less of regulation and let the market grow will also help innovation. Instead of getting into every aspect of a financial this thing, because we've been growing it for the last 20 years. There are issues, there are systemic risks that can come in if not managed well. But when you try to dictate business with this, that's a thin line which RBI will have to. That's my personal thinking. Again, as I repeat, it's a personal thinking. But however, having said that, or the good part about our RBI is that they listen a lot. They're ready to meet anytime. They're ready to discuss on all the issues plaguing it, and they're ready to get in regulations that can help solve this thing, Melanie. So even on all the new things that they want to get in, like this central bank digital currency, brilliant, brilliant concept in the sense that today. There are use cases are plenty. Like even if a marketplace say that I take 100 crores of CBDC, and then within my ecosystem between buyers and sellers, I will transfer and I'll make money. So buyer, seller, left pocket, right pocket, moving within that CBDC is so brilliant, right? Second, look at the other flip side. What are we fighting against? Again, it's a cash. What is the electronic trail to a cash? If I give you a bundle of 2 lakh rupees of 2,000 notes and you transfer it to there's no electronic trail and other things like that, right? So this CBDC, if it is there and is transferred between people, it's much more secure, it's much more this, and there's a paper trail or electronic trail every transaction where it moves. Look at the other things also. Like today, if you look at the flip side, look at the cost of printing currency notes.
Right.
Last week also there was an article where all the small denominations that you have, right? The cost of printing and just the cost of printing is much more than the value of the notes, right? And then again, all the security features, and then there is a problem of fake notes being pumped in by our neighboring countries and other enemies of the state. All those things are also a problem, right? CBDC can solve a lot of problems. There can be an electronic trail transferred securely. The use cases can be massive. As I said, the marketplace might do this between their buyers and sellers and move internally and do it as a currency recognized by the RBI and backed by the RBI governor writing it that bearer of this coin will have this thing, right? There's a government validity to it. So it's a brilliant, and I think lots of use cases will develop once it actually goes live. Similarly, buy now, pay later also, right now, what they are doing and many other things that are doing. I think each has a little problems. There were some aggressive fintechs who were giving predetermined credit without the customer asking, and they finding out and then saying, "Hey, my credit score has got affected because they had already given me one which I was not aware," and a lot of things. While at the same time, if you want to really grow consumer this thing growth, so it's a midway step that you have to do it. And let's see how RBI comes in to come out with this new digital lending norms and BNPL. But all in all, we still have a very active regulator. They mean good, but as I said, it's a whole ecosystem who have to deliver and stand up to their expectations, RBI's expectations, which is not happening. That's why a lot of issues that have gone in the last couple of years in the digital payments is because of that.
Okay. This is my last question to you, and it is linked to buy now, pay later. Fintech players along with the PCI have taken this up with the RBI, and you've asked for a certain time to comply. But, given the pace at which fintech is disrupting payments, lending, etc., do you see, you've asked for, perhaps less regulation, but do you see the need for an overarching regulatory framework just so there is no ambiguity for consumers, investors, and fintechs themselves? Something that you've pointed out, there has been a lot of confusion.
I think so. What I know, Melanie, right now is that RBI and its team is already working on that digital lending norms. It's already been announced and that they'll be coming out soon, right? All those ambiguities that we are talking about. It's a new thing, because putting credit into a prepaid license, prepaid insurance, prepaid instrument without the actual customer asking for it, or putting it as a credit line, not the actual credit, but as a credit line, and allowing him to use a PPI much more than the limits are defined based on the credit lines. That was a new thing out of the blue. I'm sure RBI has must be seeing some cases, because it sits at the top of the hill, right? Of the hill. So they have a full 360-degree view of what's happening in the marketplace there, right? they must have found some systemic risk that can disrupt or the way things are, or must have got consumer complaints or some other thing that must have triggered this activity. Me on my personal note, I don't know what triggered it actually, but a lot of chatter that you see on Twitter for consumer complaining that I didn't have money in my XYZ wallet, I took the cab and then it says it's already paid. And then I came to know that it's given to me as a credit based on my past, and then without me asking, or many other things, those all things apart from some complaints must have triggered it. So RBI will definitely now, once it gets in that ambiguity, it's always been like that. When we started, there was no second factor authentication. When we started in 2000, only credit cards were allowed to be used online. There was only a 16-digit card number, expiry date and CVV, and transaction is to go through. A lot of things have happened, the nodal bank guidelines, second factor authentication, and all these things, even now the payment aggregator licenses. So continues as the fintechs grow, as the e-com markets grow, digital payments grow, RBI will get in and will try to sort it. Only thing is they'll have to manage a very thin line between fostering growth, innovation, and at the same time regulating the whole, this wild animal that is out running and disrupting, being the #1 real-time payments market in the world now.
And also the wild animal is hopefully RBI will tame it, but it will also ensure prosperity and ease of business, and really be something for India to showcase and strengthen the country. But Mr. Vishwas Patel, thank you so very much for your views and your thoughts and your time today.
Thank you very much, Miloni. Thank you, everybody.
Those were our knowledge sessions. And now for our special track, Innovators Launchpad. It's an initiative by ET in partnership with Reserve Bank Innovation Hub to showcase innovations solving to advance India's financial sector and accelerate digital financial inclusion for 1.3 billion Indians. Now, one of the ways RBIH is doing it is through Swanari Tech Sprint Initiative. Swanari translates to self-reliant women. Today, we are featuring 3 startups and their products from the Swanari stable. These products are leveraging tech to improve financial access to some of the most vulnerable in our society. First, MoneyFirst, a unified platform enabling financial inclusion, especially for self-help groups. Next, Sampati Cards, an attempt to build wealth for domestic workers. Next, Pehchan Pay Cards, which aim to empower small and micro women-led enterprises. Hello and welcome to ET Future of Money. This is the Innovators Launchpad in partnership with Reserve Bank Innovation Hub. I'm Miloni Bhatt, and the first startup we are featuring is Aniyam Payment Solutions that has a product called MoneyFirst, and that aims to improve financial access to self-help groups. I have with me Manikandan EV, the CEO, who's a CA, and Sarahana T, the Chief Visionary Officer, who has experience in products and solutions linked particularly to the fintech domain. Manikandan and Sarahana, thanks very much for joining me here.
Thank you.
Morning.
Second, Sarahana, can you start by telling us, what was the problem that you saw which led you to come up with MoneyFirst?
Okay, to begin with, that's a very good question. The idea, how it came and where we started off with. In the big Indian market, we started working at the bottom of the pyramid. That's at the very grassroots level, over a decade, and very good, ample experience what we have. It's predominantly on the self-help group segment, their members, even the joint liability group and the farmer producer organization. We see the challenges, we have seen a lot of pain areas, and that's where our focus started. So if you ask us what could be the root cause of them and the key problem statements, we would say this: the lack of financial services for them in terms of accessibility, availability, and affordability. That's how we categorize those things. And particularly for the women perspective, if you see this, all these things categories leads to, if they want to avail the services on this financial services, it leads to loss of income for the day in terms of accessibility, because the banking channels are not nearby. It is not at their convenience. They have to travel a long way and they have to spend their time and effort. In order, if you put out in the terms of money, it's a loss of this income, and the half a day or whatever the day they have to lose it. And that service may not be immediately available, or for the day, they have to repeatedly go for that. And that's again a recurring loss for them on their revenue. In terms of availability, even though it's available, some of the other banking formal channels, the required services are not digital. So still the transactions are cash-based transactions. And because of this, the women, whoever is there, they have some sort of reluctance in doing so, and they don't have the credit history. Without that credit history, they can't avail the credit services. That's again a bigger challenge for them. And in other terms, if you look out, there are some other services, financial services or the credit services digitally available, but those are not affordable. Despite of that, people try to go and avail the services in order to fulfill their needs of the hour, and they avail the services at very higher interest. And because of that, they have to spend a lot of shell out the money, their income, in terms to repay that interest. And because of this, they are not able to have the savings habits, or they are not able to have the potential to do the savings. All these are the root cause of why we are not able to do that.
Okay. And then, what does MoneyFirst actually do? How does it sort out this problem?
Yeah. So to control all these things and to normalize, we created a platform. It's a platform as a service. And that service, we made it as a multilingual in order to give it to the pan-India's bottom of the pyramid and to all the segment out there. This product was built with all these pain areas, considering that and providing a solution, which is like a unified platform for the self-help group, for the joint liability groups, on the FPOs and its members, focusing on them. And this platform is very intuitive and ease of use platform for any novice user. If you look out on this, because of their bilingual feature, by default, their vernacular language would be there and they can switch between the other languages. And this device with the platform built with an integrated device with an Android platform, which can support on that. And that has a vernacular UI, which can use it on the go at any moment. And you have the voice prompts to give the confirmations on any financial transactions to the rural. That gives a sort of an understanding. Yes, this is the level of transactions I'm doing it, and the confidence which trust builds on that. Also, we provide a regional language receipt on this vernacular language, etc. The entire system is digital, end-to-end digital. We right from onboarding is a digital documentation. You do the validations of an account or digitization. You do the verifications on eKYCs, their KYCs, this proof of address, proof of identity, completely a digital end-to-end solutions which we are providing it. This has the instant account opening for a user who is not having so. The transactions are completely secured as per the Indian payment standards. We do have multi-factor authentications. The complete process, the flow is automated. We provide analytical reports, we provide customized dashboards. This gives the end user or the one who is operating, the women in the self-help group, if you take out, we have coined them with a name called a human banking specialist, because we bring a humanity touch to the Indian ecosystem, again, back going far away from the humanity to a robot or Android, the cobot, everything which is going on that part. And we take this opportunity to bring an assisted model service back into this ecosystem. That is how we provide this.
It's fascinating, but Sarana, I have two questions. One is that, data upon data set shows us that when it comes to women and mobiles, there are not many women who have access to smartphones and mobile banking. Okay, that is one. The second is you're also dealing with women who have little knowledge of banking and finance and all of those things.
Right.
So one is, how do you how do you manage that accessibility challenge when it comes to mobile and mobile interface, and in terms of banking and finance, the knowledge gap? And then how do you go about building trust?
Okay, so this is where the area where we play with the existing, the infrastructure, which is available at so-called the self-help group, the operators, so-called the animators in the terminology. We transform them as a business correspondent of our bank. We give them all the knowledge, we train them, we educate them in the base grounds of that. And since they are the people who are well versed in and out in the SHG domain, we can very well train them easily on the financial activities, that's small activities. And ours, like said, our application is very intuitive ease of use, even for the novice user. It is with the bilingual, with the vernacular language. It's easy for them to get hold on what exactly the menus are. And it is all simple touch, 3 clicks goes ease of use functionalities. That is why we spent a lot of our time in designing our UI, the entire flow automations in quick understandings. So anybody who is even not a tech savvy or who is not well educated in this the area of business operations, they still can very well step into this with the confidence of using it. And that makes the success for us to move on.
Okay. And how do you build trust? How do you get them to use the product?
Right. Two things out there. We prefer to bring this human banking specialist as a person who is a rural folk out there, who is one among the villager, and he is very well renowned a person out there. So it's not a third person who is coming into this ecosystem to provide a financial service. First of all, building a trust in the rural is the biggest challenge out. So the localite, the rural folk out there, he gives the confidence, hey, I'm the one who is going to provide the solution. You know me very well. Every day morning I see you, and at the end of the day, I go back with you. So the people have the trust bonding, we have that. And in the self-help group, by default, it is a bonding nature with them. It's a people out there, average of 15, they always have the trust factor in order to support each other. And that is the confidence level, which helps us to build this ecosystem in a bigger way, so that one person handle multiple group of people out there with the trust factor being he's a rural folk out, he's a renowned person, he's one among them in the group, he provides the SIG services, he provides the financial services, non-financial services, and other value-added services. And the system is itself is building of its own, so that the entire ecosystem is very strong for us to move on.
Okay, all right. Thank you very much for that, Sarahana. That clears some stuff out. Mani, if I could come to you, what is the market opportunity for you with this product, and how do you increase the depth when it comes to product offtake?
Thank you. Yeah, with respect to this question, see, self-help group, it is a combination of 15 to 20 members, and in case of joint liability group, it is around 4 to 10 people. There's already established system. We are not creating a new system. It's established system where it is from 1980s it is started and it is going on. But the problem what we perceive, as Sarana already told, there is a lot of problem, pain areas are there. So that pain areas, we are solving it. So we have identified the pain areas, and majorly the reachability, the accessibility, availability. So these are the major problems they are facing. So through our solution, we are solving these problems. So for this, we provide multiple solutions. We are not just restricting to one area or only one solution. See, it's an end-to-end solution, particularly for the SSG segment, JLG segment, and the farmer producer organization segment. So through this process, with the existing market, we are also formed the new group or new joint liability group or the formation of new FPOs. So through that, we can expand the market. So there is an ample opportunity for the market, because with our population, 130 crore population, we can easily, through organic mode, we can develop our solution, and we can provide the solution to the needy people.
Okay. You've been recognized and nurtured by the Reserve Bank Innovation Hub. It's a validation for you and for your product. What has this meant for you apart from that recognition?
See, there should be some recognition. See, suppose if I'm going to a bank or I'm going to an NBFC, no one can understand what is my ability or my advantage. But when I go to RBIH, so they have recognized, first thing they have recognized us to provide solution to the common man. See, they have listed out some 7 issues. So these are the issues they have sorted out, and that ultimately we are providing major problems for which we are providing a solution. So it is really a very what you call it's a big trust. We can say it's a trust also. We can trust whatever RBIH given to us. So with our existing experience and knowledge and our resources, we are providing the solution to the end customer who already in need of the solution. See, lot of innovations are going on, but ultimately the people who are in the rural area, they have not received the solution. But through RBIH, we are exposed to the world. We can say it's the rural world. So through this, we will provide the solution to the needy people. Really, it is a very, very important for us to go to the market.
All right. It's great that you have the opportunity, and I can see the passion that you and Sarahana both have. Sarahana, to you next. This is my last question to you. You've come this far, right? So What more do you need in terms of support to succeed in the long term?
Right. Like Money have mentioned right on the correct point, and I would take from there to answer your question. It is that need of the hour at this point of time for this rural India and for our PM's vision on taking this digital cashless economy into a big way. Startups really need the support, the opportunity, in fact, to step further. The very first step to step on is they would be having the domain expertise. They could even have a minimal viable product on that. And our team like RBIH and other, they give the opportunity, right opportunity to showcase the product to the right people and take it up to the ground level on the very first instance. Then that's where it starts addressing to the nation, the need. From there, you can start building with innovations and all your AI, ML, BI, everything you can do on. But the very first thing is to start providing the solutions at the ground, which is the right need at this point of time. So we expect such sort of opportunities. And in fact, RBIs have set up a very good platform, and they are inviting a lot of startups into this ecosystem who are really nourished and encouraged. And they have even provided a lot of support on all the banking perspective, financial perspective. They do have the mock sessions, they have workshops. These are all the things which they can keep on working on, and where our team like the startups would really need to enhance ourselves into this ecosystem.
Okay, one last question, and really the last question. But Sarahana, tell me, currently the market is different, right? I mean, we're going through an inflationary phase. There are fears of recession. Right. Money is tight everywhere. Lots of startups are floundering. Right. For a startup like you, what is the level of fear, and where do you feel the stumbling blocks are, and how do you get through this phase?
Okay, it's a really strategic question if you have to ask this. It is a matter of continuity of the business, where it is not just only the startup. The focus areas, everybody has their own focus area, everybody has their own vision and doing it, the market segment, target and all. But when you start building the customer base, that's where the real challenge comes in. That's where the big burn money has to on. So we focus in the area where the ecosystem is already built and it is there up for us. And we have the past decade, we said, we have worked on the grassroots level experience. We know the market size, we know the potential in this. And that's why we stepped into that segment to move on for this. So people like our startup, really, they do have their own vision on doing it. They really need to focus on what exactly the market which they are going on. And if they have to burn out much on the investment on acquiring the customer or to make this business potentials, then always the tumbling box is where actually the turnout of business comes in acquiring a customer base, either a database or an acquired customer base. These two are the tumble blocks. If you have that already in place, then you can really override that.
All right. Okay. With that, Manigandan and Sarahanati of MoneyFirst, thank you very much for sharing your vision with us, and we wish you all the best.
Thank you very much. Thanks.
Thank you.
Hello and welcome to ET Future of Money. I'm Aloni Bhatt. The second startup on Innovators Launchpad is ProPublica Finance and Investment Services Private Limited, which has a product called Sampati Cards, targeted especially at domestic workers who are overwhelmingly women. I'm pleased to have with me Saurabh Kumar Karn, who is the co-founder and CEO of ProPublica and has worked for a decade in education, tech, and policy. Saurabh, welcome.
Thank you so much, Meloni, for having me here.
Thanks very much for your time. Domestic workers are among the most vulnerable in our society. What led you to bringing out this product for them?
Yeah, it basically started from a personal experience. Early this year, we were just having a conversation with our domestic worker who last year asked us for like a 50,000 rupees loan. We were unable to give her that kind of money, but early this year, when we inquired about what happened to that particular loan, where is the situation and everything, because she needed it for her daughter's education. She basically said that she got it from an informal channel, and the terms of the loan was just appalling, right? Like she borrowed 50,000 rupees and she was paying 2,500 rupees every month, but none of that was for the principal. So despite paying like almost like 10,000-12,000 rupees, she still owed 50,000 rupees, which effectively makes your interest rates go skyrocket, right? Like it's off the charts in that sense, and that felt very unfair to them. We looked at what the data says about domestic workers and their incomes in India, and it just did not. The math didn't add up. We went a little more investigation into how the loans are or credit problems. Credit is given to the domestic workers as of today, and we realized that there can be disruption there, and that's how the journey of ProPublica Finance and Services Investment Services Private Limited started here.
Okay, so can you flesh out some details on what exactly the product offers and how does it do away with the pain points?
Yeah, absolutely. So, so the product really is a phygital card. In India, 25% of the women basically own a smartphone, right? So for them to be onboarded onto a platform or like any sort of a service which basically has digital payment as its infrastructure, it's very difficult. So we had to basically come up with something which works both offline. But at the same time, we realized that the employers most likely have a smartphone and are making UPI payments, right? So we had to basically build an intermediary, which basically ended up becoming Sampati Card. It's a QR code enabled card where a domestic worker takes this card, goes to the employer scans the card, and that's how the domestic worker and employer relationship happens, right? So this card basically forms a quick contracting between the employer and the employee. Now, when the employer basically makes the payment for the salaries, that basically gets routed to her, and we are able to verify that income. The biggest challenge with respect to the credit provision to the domestic worker is that no one is able to underwrite them very properly because there is no data available with respect to their salaries and things like that. So once that happens, what we are able to do is we are able to generate salary slips for them. We are also able to sort of provide them with services like building their PAN cards, doing their ITRs and things like that, all the good documentation that is required to access a loan, so that tomorrow no domestic worker basically has to go to an informal borrower and get a loan at like 50, 100, 200%, which is a really large market. What we are doing is like we are filling the gap that banks and NBFCs find very difficult to do. They are largely doing it through joint liability group model to disburse loans. What we are able to do through our point verification system is establish a contract between employer and employee and able to verify the salary payments made to a particular domestic worker, and use that data to help financial institutions actually realize what is the true credit worthiness of this domestic worker. See, there is no accounting of the salary payment, or even if in case of our domestic worker, she was making the payments regularly, 2,500 rupees every month, right? But none of this gets recorded. What essentially we are looking for is the behavior that the person is not going to default and would be able to pay the loan amount that this person has taken. So the accounting for salary and the credit, your loan repayment, these two things which doesn't get recorded right now, through our platform, we are basically recording it so that the formal financial institutions are able to recognize them as good borrowers, which doesn't happen right now. Also, because most of these domestic workers are new to credit customers, they don't have a credit score upfront. So these documents are the ones that makes it easy for anyone to underwrite loans to them.
At this point, can they make payments with the card?
So card is not for payments, right? Like, so the QR code is not your UPI QR code. That QR code basically attaches to our system. It basically forms a link between the employer and the employee. There are verification messages, there are OTP verifications, and then there are like unique hashes that we sort of use as a mechanism to establish that there was an intent to hire this domestic worker, that this payment was actually made, and that there is no coercion in between, like that there is no one.
But is there a plan to embed payments within it?
Yeah, so
over a long period.
No. So this is upfront in our product. We do not rely on a QR code to make the UPI payments. We actually rely on something called UPI deep links. So as an employer, you receive every month a payment link on which if you click through your mobile phone, any of the existing UPI apps, Google, Bheem, PhonePe, whatever you use, you are able to make salary payments. So it's easier for you to make salary payments online than to go to ATM and withdraw cash and to give your maid. So that's the employer side of the story. But
Okay.
QR code itself is not a UPI QR code. For the UPI payment, we are using UPI deep links.
Understood. Okay. How do you plan on taking this product to the market? And, what's your vision for it?
Yeah. So there are a couple of channels that we have figured out to reach out to our customers. First is unions. There are a lot of domestic workers union across country, and they are of the of size of like 10,000, 15,000 members. That's one channel that we are actively sort of like approaching, because the awareness is something that the union has already sort of solved for. Because of pandemic, unions basically realized that there is a lot of problem with respect to like salary payments. Domestic workers actually needed loan because most of them lost their jobs, and these problems were just realized, but it was too late to do anything. So there is a huge demand from union side. The other channels that we have are your maid provision services. So maid services, which basically gets a maid to your house to work, they don't necessarily get into the whole business of like streamlining the salary payment. They would most likely take an upfront money for you for them to provide you with a maid, right? We are partnering with them so that their domestic so that all the people that they supply, all the domestic help that they supply, they are able to get all the necessary documents to strengthen their financial standing. They already probably have it, right? Like they already are earning money, but it's just the matter of accounting for that money and the repayment. That is really the big chunk which we are sort of solving for.
And
yeah.
you tested it in beta. Are you testing it, Saurabh? Can you give us a sense, if at all, that has happened? And what's been the feedback for you?
Yeah, so I think the biggest challenge that we have at least figured out in our conversations with all the domestic workers is that there is still a lack of awareness with respect to going to the ATM. They find it intimidating. Like bank as an institution itself is intimidating, but like even going to an ATM and working with that machine itself is intimidating a little bit. But at least like our primary research that we have done with respect to domestic workers, 20% of the domestic workers, at least in our sample, have switched to taking money online. So you can Google pay them the money, you can phone pay them the money. But again, right, like if you can phone pay the money, then why Sampati card, right? The thing is that if you Google pay the money to your domestic worker, there is still no difference between a peer-to-peer payment and a salary payment, right? So there is no attribution of like whether this money was actually sent for the salary, that this is a recurring money that this person is going to be receiving. So that basically becomes a problem, and that's why you need a point verification system to sort of ascertain that the domestic worker and employer actually have an employer-employee relationship. So mind you, like there are no liabilities that the employer really has to take. There are no tax liabilities, both from the employer and the domestic worker side. There is nothing. It's just the paperwork is not right now in place, and that's why domestic workers find it very difficult to even apply for a credit in that sense. So that's what we're learning. Yeah.
You're being nurtured by the Reserve Bank Innovation Hub. How has that helped? And, also what more would you need to really succeed?
Yeah, no, Reserve Bank Innovation Hub like was probably the biggest thrust to us, like sort of like jumping full time into it. I mean, we very serendipitously like landed on the RBI Sonari tech sprint page. We registered and went through all of that stuff. What like really stood out to, if I have to like sort of like say like a couple of things that like really went well, I think just the curation of both the people and the resources that RBI Innovation Hub did on the platform was excellent, right? We were able to sort of get synthetic data on the Indian consumers, their habits and their earnings and their like spendings, which basically helps us form like a really good like default models and things like that. Otherwise, it would have been like so expensive and so much time taking for us to like gather that data and have any sense of like what the current market really is. Other than that, there were APIs available from n number of banks and things like that, which really helped us like think through our product really, really well. And the other thing is like with respect to the structure, there were like there were scrum calls. The Aditi and entire team basically like ensured that we got all the support, all the questions that we had were answered on time. And just generally, like I think the best experience that we had was pitching it to the panel of experts. The kind of inputs that we received, we would have found it very difficult to get like those insights for our startup, right? And having that early stage matters a lot, right? Like then you are not like sort of wasting your time in doing things that would not be fruitful, or like you're thinking about like dimensions that you wouldn't have otherwise considered. So in that sense, RBI Innovation Hub has been like very catalytic. other than that, like just have, the ability to have conversation with a lot of other players, just because, RBI Innovation Hub is someone like who has validated that this is something that that is potentially worth, taking forward. It just opens a lot of doors, right? Like we have been able to speak to a bunch of NBFCs, banks, and other partners just because, despite being very early stage in that sense, because we have been, one of the winners of RBI Innovation Hub Tech Sprint, Sonali Tech Sprint 2022.
All right. Well, Saurabh, CEO and co-founder of ProPublica Finance and Investment Services Private Limited, all the very best. And thank you so much for joining us on ET Future.
Thank you so much for having me here.
Hello and welcome to ET Future of Money. I'm Aloni Bhatt. On the Innovators Launchpad here at ET Future of Money, our third startup is MaxPay Fintech Solutions Private Limited, with its product, Pehchan Cards, which seeks to empower women-led small and micro businesses. I'm Aloni Bhatt, and I'm very happy to have with me the CEO and founder of MaxPay, Shiva Prasad. He has worked at Goldman Sachs and Dell in investment banking and technology. He has been a serial entrepreneur and a consultant to companies in frontier technologies like blockchain, ML, risk management, and others. Shiva, very good to have you here with us at ET Future of Money Innovators Launchpad in partnership with Reserve Bank Innovation Hub.
Thank you, Malini, for the invite. I'm glad to be part of this. Really excited.
And we're excited to have you. Shiva, can you tell us a little bit about what led to the Pehchan Cards and, what are the problems that it wants to solve?
Yeah. I think, we are at a cusp of this point in India, Melanie, where we want to empower women, from a livelihood standpoint and really scale the bar, right? So right now, we have provisioned over more than 400 million Jan Dhan accounts, right? A portion of that is, majority, used by women. But the flexibility of using that account and really ensuring that you use that account for not only direct benefit transfers, but also use that account to make payments, use that account to actually save small sums of money in that account. I think that is where we felt like there's a friction around it. And what we do is, as a Pehchan card, we lay a digital virtual account on top of it. So the account stays with the banks like SBI, Bank of Baroda, but then we layer a card on top of it, which is a very simple Pehchan card with a virtual account mapped to it. And that makes it a frictionless opportunity for women to just show the card and receive payments, for their business. And at the same time, use the same card to make payments from the QR code as well. So it's a bidirectional card. You can receive money and then you can also make payment, but the money stays in your account. You're in control of the account, right? So that's what Pehchan does.
There's a lot of talk about how a lot of Jan Dhan accounts are inactive, right? Like people are simply not using them.
Right. So this virtual account actually maps it to your Jan Dhan account, right? So you have on the onboarding process itself, we map their Jan Dhan account to the virtual account, which makes it seamless for them to move money in and out. The biggest challenge we saw that was a lot of women have smartphones, but they don't use the banking applications on the smartphones because they don't have control on the account. They're not worried about money being moved out or in. But with Pehchan Pay, what happens is your face is the identity for moving money in and out. So anytime there's a payment which has to go out, you show your face, and that's how you're in control of your account. So all the money comes in, you're in control. It's not your husband, your brother who has access to your UPI pins or OTPs, but it is your Pehchan based on which you can make payments. And that's where we thank RBIH and NPCI, and we're doing a lot of pilot in having that top-notch tech accessible to women, more from an empowerment, and digital footprint kind of go up. They'll start doing a lot of payments, and there's a lending rails which is built into it, right? So as much business I grow, I can borrow money over the counter on the phone itself, and that's almost like near real time. So we're going to offshoot all these offline money lenders and give them opportunity to borrow. Small ticket sizes, the sachet loans about 10,000 to 100,000. And the repayment is also very digital, right? They repay 90 rupees and that gets debited from their Pehchan Pay account. They don't even need to go to the bank. So we're keeping the ecosystem the same with the banks, but layering a feature on top of it, just to make it very, frictionless, so to speak.
You said that you've been able to test it out. What's been the feedback for you?
Oh, it's been fantastic. I think we did a small pilot to see how we can help self-help with women just to get access to credit, from a credit standpoint, but at the same time use the same Pehchan Pay card to receive payments from their customers. right? So it's not only about giving digital footprint, but also where these self-help group women make artifacts, right? They're small carpentry or paperwork and all. We also provide market linkage to them. So that means their products can be generally discovered by customers like you and me, and then that brings business back to them, right? So the feedback has been fantastic, and they really like the frictionless payments, so to speak. But one thing which came out really strongly is the money stays in their account, and they are protected, and that trust comes in together, right? So that's something which we're really proud of.
Speaking of women-led micro businesses, especially in developing and emerging economies, they're confined, as you said, to really small businesses, right? And they're very often forced to operate informally because they're financially excluded from the digital economy, and they also face deep biases in accessing markets and finance. Now, so what happens with this is that there is a data gap when it comes to these women.
Correct.
So how does your product overcome those challenges, when it comes to market penetration?
Right. I think this is really critical for a country like India, right? Because the masses are there, but the awareness and education about products like these exist, that has to be rolled out. And that is where partnerships come into play. So we've partnered with a lot of large NGOs who work at a systemic level on the ground with a lot of women entrepreneurs, and they are our go-to-market, kind of a partners. So they reach out, they say that there's a platform like Pechan Pay, we will onboard you on that, and that brings that whole momentum kind of kicks in. So I think partnership and leveraging two sides of the story. We are a for-profit organization, but our partners are not for profit, right? But what we give them back is a social return of investment. So we actually monitor a woman who's joined our platform today, if she's making 10,000 rupees, and because of our intervention, if she goes up to 25,000 rupees in, let's say, 3-4 months, that social return of investment is captured by the NGOs, right? And that's where their impact from a livelihood standpoint comes together. And for us, it's more flexibility on the platform.
Is that how you get, the end user to trust you via the intermediary?
That trust and that relationship has been there for a while. Yes.
Okay. You were a part of the Reserve Bank Innovation Hub's Swanari Tech Sprint, that identified 7 problem statements.
Yeah.
And essentially the idea was to create smart and sustainable solutions for low, middle income women, who are also underserved, and also for women-led enterprises.
Correct.
What's been your experience?
I think it's been fantastic. And we really thank RBIH for that, because I think as a country which is emerging, here is where a regulator has come together and said, we will enable fintechs to innovate, at the same time regulate in a kind of a frictionless model. I think India is one of those unique countries, and our experience in terms of participating, talking to mentors, and really getting through the problem statement and solving it together for scale, that has been really, really fruitful. And we really thank RBIH for that, and taking it forward with the collaborators they have and the sponsors like Bank of Baroda, Axis Bank, and other participants, right? We are now able to extend our solution to those rails, within banking. So we're talking to the banks and saying, as a fintech, we'll reduce your cost of acquisition, and then you can be the liquidity provider for funding these women. So there is a really good hand-in-glove collaboration which is happening between the regulators, Innovation Hub, the banks, and fintechs like that, like us.
What are the pain points for you? From your vantage, what do you really need to succeed long term?
Yeah, so I think a lot of startups in India are at that point where they're getting a lot of access to capital, at least at an angel level. They're building those solutions, and they're trying to figure out not only from a tier 1, but a tier 2, tier 3 standpoint. So we're getting a lot of solutions coming out. But the key, I think, Miloni, is implementing these solutions into large corporates or banks, where you actually take them out there, put it out there, see the feedback loop gets completed, and then have a rollout plan, right? So putting it from an embedded finance, if it is a large corporate, or plugging in your solutions from a fintech into large financial institutions or banks. I think that has to come up right now in India, where we should start trusting that a startup would have done enough due diligence and they're not that risky, but then give them an opportunity to roll it out in a pilot, or do some level of production testing. But once that trigger point comes in India, you'll see so much of innovation happening that it'll become mainstream very, very quickly, what I believe.
All right. Okay. Shiva, share with us, what's your vision like for the Pehchan Pay Cards?
See, if you look at the PhonePe and the Aziz model, India is looking at 10 trillion in payments, ecosystem alone compared to the overall system, right? So I think a lot of Indians have access to mobile phones, and with 5G coming in, I think it's only going to expand. And we're looking at the industry railroads which are being built. Like the government is doing so much; they're building ONDC as a network, right? So we would like to be that player on an ONDC rail, tackling the payments challenges, right? And supporting UPI parallelly and grow and scale with UPI, but have our own identity. So we're calling it one identity, one app. So if you have in Pehchan Pay, that means your money is protected, there's trust, and then you can make payments bidirectionally, frictionless. So that's my vision for Pehchan Pay.
Shiva Prasad, thank you so very much for your participation, and we wish you all the best with your product.
Thank you so much. Thank you. Thank you.
Hello and welcome to ET Future of Money. Banks in India have opened their application programming interfaces or APIs. And what this does is it allows third parties to build on them and offer innovative products and services. This cooperation between banks and fintechs has completely transformed the customer experience. And what is the potential of API-led banking? What more can we as customers expect, and how does this accelerate the growth of India's digital economy? I'm Maloni Bhatt, and to delve a little bit into all of these things, I'm happy to have with me Akash Sinha, co-founder and CEO Cashfree Payments, which is a payments and API banking solutions company, which is based in Bangalore. It recently got the go-ahead from India's central bank for cross-border payments. It's among the 4 startups that received the approval. Akash co-founded Cashfree Payments in 2015 with Riju Datta to solve the challenges faced by businesses in bulk payments and dispersals. Before launching Cashfree Payments, Akash worked with e-commerce giants such as Amazon and Bank Bazaar, where he built products as a software engineer. Akash, welcome to ET Future of Money.
Hi, Melanie. Thank you for having me here. Really excited.
Great. First of all, congratulations on getting the RBI go-ahead for the cross-border payment product. Can you start by telling us a bit about it? How does it work and what are the possibilities that it presents?
Right. Yeah, I mean, before getting into what solution we are going to build, I can just brief upon what problem we have been seeing the ecosystem, right? So in India, I think a lot of people are active in stock market, right? And so far, it has been easier for us to buy stock which are listed in NSE or BSE. But over the past few years, we have seen a great interest in a lot of Indian user who wants to buy stock at foreign exchanges, right? Like of NASDAQ, right? And I'm sure you have seen in your circle people excited about buying stock of Apple, Tesla, Google, and all, right? So historically, I mean, people were able to do it, but the process was very cumbersome, right? You have to spend a lot of time in KYC, currency exchange, right? And you have to do one-to-one transaction. So basically, whatever gain you make gets compensated by a lot of money you lose because of all this old kind of process, right? Due to currency conversion and all the operation process. So that is one problem we discussed with RBI, saying this is a big market being created and there's a good demand for this kind of product. So we are part of their sandbox program, which they had last year, right? So we prepared a solution. We prepared, instead of every consumer settling the fund directly, we as an aggregator can pull the fund in India and settle to one broker in any foreign exchanges is they're based out of. And this will reduce the entire turnaround time, and also the foreign exchange fee will be very optimized, right? So the best part is coming to solution. Once I think after the approval, any consumer finance app or any wealth management app can use Cashfree Payments in the backend, and consumer will be seamlessly able to buy any of the foreign stocks which are listed in those foreign exchanges. So that's the approval, and this is the first time going to happen in India. This was not allowed before. So we are very excited. I think we are going to go live with 3 or 4 exchanges very soon, right? Given that the approval came just last week, we are getting prepared, and we are hopeful of the getting good traction out of this approval.
Can you tell us a little bit about the platforms, the exchanges that you're going to work with?
See, there are 4 to 5 under integration. I think these are again very popular, I think, wealth management apps. So once they go live, I think we'll be in the position to share it. I think right now they're under integration, so we don't know.
Not even a little bit of a hint.
We don't know the timeline, honestly, but I think we can share it in in the next few weeks. These are the top wealth management apps in India.
But Akash, tell me, in terms of timeline, what is the broad timeline that you're looking at for this integration?
I think few weeks to a month. I think given that we already did a test transactions, we did around like few hundreds of transactions during the sandbox itself to show this flow works, right? So all the integration is in place. We are waiting for the go ahead from RBI for larger mainstream rollout. Now that approval is there, we are getting all these partners ready. Again, we don't know their priorities, right? That's why it's harder for us to comment. So there will be few ones going live, but again, also depends on their roadmap, their consumer outreach, and what plans they have for them.
When you did do this test, how did it go? And how do you see this market essentially?
See, the test we did jointly with RBI. So we have defined a test scenarios like what to test, how to test the flow of money. So that was a joint exercise. And this market is growing, right? I mean, in the retail market, especially the urban consumer, right, who get excited about all this. Because I mean, they're right. If you want to grow your wealth, right, one avenue is you can go to Indian market, buy equity there. Second is you can also go to the global market, buy equities there, and that way a lot of Indians can be able to grow their wealth of whatever the savings they are making. It just creates more avenue, right? So now you have more options. Instead of just sticking with one exchange, you can go to any global exchange and try it out.
So cross-border payment, of course, is one way that you're expanding your product range and your market, right, and so on and so forth. But you also want to expand internationally. I mean, is the goal to reach 15, 18 countries over 2 years? Is that correct?
That's correct. That's correct. So cross-border, I think we discussed about LRS capital account transaction. In cross-border, we're also doing LRS current account transaction. Basically, we're also helping a lot of these platforms, like send education fee payment from India to abroad. Right, we're also going to start doing some kind of medical kind of like remittances and all those things. So cross-border is a big space for us, and we're going to go very aggressive on that. Okay. Along with it, so I'm coming to that. Along with it, the international launch plan, I think, is in parallel to it, right? I think, because India is pretty ahead in terms of fintech game, right? The kind of solution we have built is state of the art, not just in India, also globally, right? And the kind of scale we have in India is unique, right? So Cashtree as a company, we process more than 1.5 million transactions daily for one single merchant, right? So that is the kind of a scale you cannot find anywhere in the world so easily, right? So by doing such kind of use cases, the platform are very scaled up, well tested, and the kind of products we built are very innovative, right? So we explored the market, and we believe there's a good opportunity for us to take this product, go into those geographies which are slightly behind India, and also serve those local markets with all these innovative products. Right, so the larger target.
So which are these
markets? So we are looking at largely emerging markets, right? Like markets in Southeast Asia, Middle East, North Africa, Sub-Saharan Africa. So that is the area we want to cover in next 2 to 3 years. We already made one acquisition in Middle East last year, and we are very active in Southeast Asia right now. So hopefully, if things go well, we can come back with the news about that very soon.
So you're looking at such kind of partnerships via M&A for you to be able to foray into all of these places?
Largely, yes, because payments, fintech is a regulated space.
Yeah.
Right. And we also don't have a lot of local operating experience, right? So we are looking for a team who already have experience of running this business, so that we can have some kind of booster to get started with. And then we can help them with our insights of products, and so that we can roll out in this market faster.
Okay. I want to talk about the API-led banking. Banks and financial services are going digital, and that's put the spotlight on API banking, of course. But from your vantage, what does the future look like? What are the new products that you see emerge?
Yeah.
Definitely shifting the way, we are going to consume services and products, even in the way that they are being distributed.
Correct.
And I think the moot here is at the end, how do you improve accessibility for underserved?
Right. See, I mean, if you look at the entire fintech pattern, right, both payments and banking are either becoming invisible or being bundled with some other services, right? Say if I'm, like using some kind of, like bill payment website, I also have an option to create my bank account there, right? So that is the kind of flow we are going to see in the future. And for that, these APIs are very, like important, right? There's no other way to do this kind of flow. So that's the direction the entire market has taken, right? So people will stop going to one single application just to banking or just to payments, right? So these are going to be like integrated services with the app they use, right? Example, suppose I am a teacher based out of tier 2-3 city, and I'm using my app to schedule calendar for my students, right? So most probably that app can also help you manage your earning, right? They can help you collect money from your, the parents of the students. Although that app can also help you with some kind of lending, some kind of, like investment product, right? So one single app can help you do banking plus your regular job that you want to do, So that is the future. I think we'll stop seeing payments banking as a separate from the core app which people use, and things will be very integrated, and the entire experience will be very contextual for all these users, right? So suppose a teacher, just example, right? Hypothetically, suppose a teacher is saying, there will be holiday season. The app can suggest, right, for next 3 months your earning is going to be low, and you should focus on your saving, right? So such kind of flow would be impossible if you don't have both the businesses talking to each other. Right. So those analytics can be done if you are banking plus other data with it, or if you have payments or some other data, on the single application. And this will enhance the entire experience for the users who are going to use such kind of like integrated apps for their work.
Do you see this as creating monopolies at all?
How no, right? This is going to create so many good, healthy competition in the market. Monopolies are created when you have like 4 to 5 defined areas to go and access banking, right? But when you say anyone can integrate banking payments with their app, right? So it is more like democratizing the access to it. So this is going to give more options in the hands of user and increase the entire competition among all the banking and payment service providers eventually.
Yeah. So what are the challenges for players such as you?
Challenges not as challenges. We are the ones who want to enable it, right? So today what we see, suppose you are building an app, same example, right? Suppose you are building an app for a teacher, and you want to integrate, say, fixed deposit kind of application as part of it, right? So every end of the day, you want to nudge teacher, right? Why don't you do fixed deposit of like 1 lakh rupees and get some money? Not to do that, this application, this app user, or this app company has to go and work with banks directly, right? And working with one single bank takes a lot of time. They have to spend 3 to 4 months in integrating their APIs. And if they have to do with 4 to 5 banks, it will take around 15 to 18 months. So that is a lot of time investment for all these regular apps to do it, right? So what Cashless is trying to do, we're trying to create a platform which will aggregate APIs of all these major banks. And all these third-party developers, neobank, a platform, they can just integrate Cashless API and go live with their banking products within weeks. So that way, this entire banking payment democratization could be done much more faster in the ecosystem compared to the way it happens right now. So today you have to invest 6 to 9 months in just creating a basic banking product. And sometimes that may not be a core offering, right? That could be one of the offering to improve experience. So that's why we want to create the platform so that the entire creation of banking and payment, embedded payments and banking could become easier in the market. So
yeah, go on. Sorry.
Yes, we have been doing this. I think we launched a product called Accounts last year, through which anyone can create bank accounts by calling the API. So we are working on other product like card-ish paying, something around lending. We'll also work on fixed deposit or things around investment. It's a very big charter we are pursuing. So we're just getting started, just on the surface. I believe once we're ready with the entire platform for all the products, then we'll see a lot of newer banks and different kind of platform able to create embedded banking experience, much more easier way for their users.
You mentioned accounts, right? How is that working out?
It's working out good. I think we have around 10 beta customers using that already, right? So be it both on the SME space, consumer space. So we're seeing good traction. Given that product is new, we also have to keep on refining it depending on the market feedback. But we see a good demand for this kind of product, right? So especially in the segments like lending or accounting.
So open banking as a service, it offers a lot of opportunities for fintechs, for banks, But of course, there are concerns, privacy, security. So in terms of regulation, do you feel there is anything particular from your vantage that is needed?
So we have been pretty vocal about it, right? So to create, to have more aggressive rollout of fintechs, I think it's high time we should start recognizing larger fintech intermediaries, and on top of which smaller fintechs can be developed. And this larger fintech intermediaries, or we can call super-fintech, they can take a bit of load away from the bank, right? Things around data, accessibility, privacy, and so that can enable creation of more fintech. So we have been speaking about it. We also pitched this idea of regulating this kind of super-fintech, which can make this entire accessibility of banking services much more easier for larger market. Right?
So you're essentially saying, Akash, sorry, bear with me, that then there are 2 sets or multiple sets of regulations for super fintechs and then for the other ecosystem.
So today the entire ecosystem working on bank and fintech partnership, right? One bank is working with fintech. Now it's getting difficult for banks to work with all kinds of fintech, and also difficult for banks to work with large number of fintechs, right? Because the kind of services the banks have are not modular. Right? So banks don't have some kind of, like tiered use case, right? Either banks open all of their APIs to fintech or they don't give anything. But if the bank create a layer in between them, right? If they create a super fintech layer, then fintech can, have some kind of like access. It's like a middleware, right? And now it can give a tiered access to the other fintechs in the market, right? It's more like getting a very big box from a, say, larger company and creating a smaller boxes out of it and give access to just one smaller box depending on the use case. Like example of this again, be a teacher neobank, right? For a teacher neobank, they just need access to fixed deposit API, right? They shouldn't have access to account creation API or card issuing API, right? But for a bank, it's difficult for them to restrict access to all these APIs. And that's where you see a bank has to spend a lot of time in vetting every new fintech and deciding whether to give them access or not. But if we have a layer of super fintech in between, then it becomes very easier for us to just give the access to API which they need and block access to other APIs which is not part of their business. So it's high time, I think, maybe the entire ecosystem can look at regulating this kind of intermediary, right? So that more fintechs can be created and things are done in a more structured, disciplined, and a secure way.
Any feedback to your suggestions?
It's pretty new. I think we've been talking about it for a few months. So let's see. I think we had a white paper release, I think 2 weeks back in Bombay around how retail banking or how APIs can increase the access to retail banking. Pretty new idea. So we are talking to regulator, policymakers.
Is there any geography where this is done?
Geography. So see, in other countries, right, I think neobanks, digital banks are getting licensed right away, right? So this kind of structure, I think, may not be needed, may not be feasible. Right? But there are few examples, right? So in US, you have Played, who is like licensed entity. See, in other parts of the world, fintechs are getting licensed, for a long time, right? In India, it just started. So in India, banks have the license to do many things. Fintechs are not getting licensed for a while. So it's not easy for me to compare these markets. And the number of fintechs in India is also large.
Right, compared to many other countries. Right. You were among the 200 odd fintech companies that submitted proposals seeking the approval for a payment aggregator license to RBI.
That's correct.
Right. And there are, of course, some fintechs have received in principle nod on it, and there is this whole point that, that firms approved by RBI can acquire and offer payment services to merchants. And then this will enable, say, a more regulated, a more standardized payments ecosystem. What are your thoughts on it?
See, payment aggregators entities have been around for the last 10, 12 years. And we have been working very closely with the banks and adhering to their guidelines. And also there was master direction by RBI. But of late, RBI planned to regulate these entities directly instead of going via bank. And that's why this entire licensing requirement has come in. Right. So again, we are pretty confident getting it. I think we have been in business for the last 7 years. And we have been getting approval from RBI on all the innovative products. Right. So I think we have submitted application a few months back. And I believe they're processing in a first come, first serve order. So,
and do you think this will make for a more secure payments ecosystem?
Could be. So see, I mean, what is happening in the industry, right? People who are into business, they believe, I have good customer, then I can also start payment gateway business, right? So people who have not been, making payment gateway as a prime business, they were still part of this business, right? The problem is that hurts the entire experience of merchant and consumer end of the day. It's important for businesses or companies to make payment aggregation as the primary business. And that I think will be clear once the licensing thing gets finalized, right? I'm sure I think companies who have this as a priority, right, who wants to build great things around payments and banking are the ones who are going to stay around. And companies who are just, like experimenting around it, they may have to partner with it, or they have to put more focus area on this kind of space. So this is more like, regulating it in for a good way, right? So that the money of merchants and consumers stay safe. The entire trust of the ecosystem grows, and then many consumer businesses will start using online payments, right? So it's like a cycle, right? If you increase trust, then you'll have more actors on the entire ecosystem. And that I hope, right, will be the outcome of this entire exercise.
There's this other thing, right? Like India is supposed to have 1 billion smartphone users by 2026. There will be internet-enabled devices in the rural market, and there is this BharatNet program, right, to fiberize all villages by 2025. from your vantage, as someone who's had the first mover advantage within this ecosystem, how do you see this as further changing the landscape when it comes to digital payments in India? And what is the kind of scale when it comes to opportunities that you see emerge?
Right. See, first of all, right, when you compare Western countries with India, right, India is not a homogeneous country. There is a humongous amount of diversity, right, be in terms of language, be in terms of income group, be in terms of age. Right, so we'll have consumers coming to digital ecosystem in batches. Right, it cannot happen that everyone will come together. Right, so far we have been able to get consumers from urban cities, tier 2, tier 3, like as part of the entire digital ecosystem, right, in a certain way. But the next set of, say, 200 million, 300 million people will come, through different areas that we don't know, right? That only time will tell. Right? So internet is the primary need. I think even today, right, we have more than 600, 650 million people using internet in India. That itself is a pretty large number. Right, and that's where the entire innovation around fintech is needed, right? So instead of just doing vanilla payments, vanilla banking, if they can part of a larger app or can make embedded payments and banking, then that is one way to increase the use case or increase the usage of digital ecosystem in India. Right? It may not happen with directly going and saying, this is my core banking app, use it. Right? So a lot of people may not see value in it, but if you bundle it with something which they like or use it, then the usage of core banking, core or digital payments will grow in those markets.
Sinha, all the best for everything that you want to do ahead, especially your foray into international markets, the payment aggregator license that you hope you'll get. And thank you so very much for speaking to us.
Thank you. Thank you very much. It was very nice speaking here.
Well, that's it from all of us here at ET, Future of Money, from me, Maloney Bhatt, and from the entire team. Thank you very much for watching. And do check out this space for more insights and deep dive interviews on money and its innovations. For now, goodbye.